Good morning, everybody. Welcome back to another episode of The Market Open. It is Tuesday, November 11th, 8:46 a.m. We are live. Thank you, everybody, for being here. We've got a lot to talk about today. We had Nebius earnings this morning, which, quite frankly, Nebius crushed it. So we'll talk a little bit more about what we got going on with Nebius. We got the shutdown coming to an end, which is very important. The Senate officially passed their procedural vote. It now goes to the House as that gets voted on. Hopefully later today, we're going to get some updates in terms of the shutdown coming to an end and potentially the government officially reopening. You got a bunch of different macro stuff to talk about. We are getting a little bit more data now that the government is getting ready to be open, particularly around ADP private payroll. So we'll talk about that. We did get a couple of pieces of macro data yesterday that will be important to dissect. And we will go from there. Softbank sold their Nvidia stake this morning, which is pretty crazy. $5.8 billion stake. The story with Softbank is if they held on to their position that they sold in 2019, they would have a $250 billion stake. Masa-san obviously seeing more opportunities in OpenAI, ARM, and some of these other companies, potentially Marvell. There was a rumor last week SoftBank wants to take them private. So you do have them exiting their Nvidia stake. And they said it wasn't really about their conviction in Nvidia. It was just better opportunities that are out there. So we'll talk about that, analyze it, and we'll kind of see the implications of it as well. And then we have a red pre-market. Now, the red pre-market, in my opinion, is not based on any specific headline. And I kind of saw it went red when the futures flipped red yesterday at around 12 a.m. Eastern. I think it's just because we had a crazy day yesterday. We had the best day since April for Nvidia. Nvidia was up 6% in a day. That hasn't happened since April. So quite incredible to see Nvidia get that type of momentum. The broader S&P 500 was up 1.5%. I mean, it is normal for the market to take a little bit of a breather on a day like this. 679 on the S&P, down about 0.25%. So we'll see when the market opens if this sell-off intensifies. Not really that much of a sell-off in the pre-market, but nonetheless, I do think it's consolidating some of the gains that we are getting from yesterday. And that's some of the stuff we got going on in the pre-markets. First of all, before we get started, it is Veterans Day in the United States. So want to wish a happy Veterans Day to anyone who has served for our country. It is, one of those things where as I've gotten older, I've started to realize just how special America is and how much myself and so many Americans take freedom for granted. And, as you get older, you start to recognize, what have you contributed to society? And outside of paying taxes, I've never defended my country or put my life on the line for my country. So it is an incredibly, incredibly honorable thing to do, and very, very grateful to those who have served in the U.S. Army, military, Navy, Air Force. If you've, put your life on the line for this country, I am deeply appreciative of that. Having said that, Veterans Day means that the bond market is closed and the stock market is open. So you might not see as much volume given credit markets are going to be closed today and a lot of different banks are closed today. So we will see a market open. We just might not see the type of volume we saw yesterday. And that could also potentially influence some of the behavior in the stock market as well. Yeah, for all the vets in the chat, thank you. Thank you for your service. I mean, thank you is not enough to say, but it's the least we could say on a day like this. So deeply, deeply appreciative and thank you. The older I get, the more I realize how important it is to not forget that the only reason I'm able to talk freely on a platform like YouTube that was developed in this country is because we have free speech. And one of the reasons we have free speech is because people fought and died to protect that speech. So deeply, deeply appreciative to those who served our country. Okay, let's get into it. Nebius, let's start off with this. Well, first off, let me say the obvious for those that just saw my tweet that I posted 40 minutes ago. And the reason I posted it 40 minutes ago is because I did something 40 minutes ago, which is I bought Nebius. I'm in. I am in. Officially, Nate can stop texting me every day now. I am officially in. I'm in the stock. I'm in the name. Look, those earnings were pretty damn good. Quite frankly, I forgot Nebius had earnings this morning. I woke up, I looked at my phone, I saw the numbers, then I saw the stock. It was red. I'm like, wait a second. These numbers look too good for this stock to be red. Revenue of $146 million. Adjusted EBITDA beat expectations. They are targeting $7 to $9 billion of ARR in 2026. That means the stock at this valuation is trading at 3 times revenue. It's pretty damn cheap from that perspective when you also think of the margin profile extending or inflecting going into 2026 as they continue to increase the ability for them to actually make a profit on this type of revenue growth. Their contracted power for 2026 went from 1 gigawatt to 2.5 gigawatts. And in the end of 2025, they were scheduled for 220 megawatts. They are now targeting 800 to 1 gigawatt by the end of 2026, not just contracted power, but connected power, which is like actually what allows them to be able to scale their data center operations. One of the biggest things from the press release and from what Roman said on Twitter, who's the co-founder of Nebius, is that we sold all we had and we're going to build much more. AKA, this was not a demand problem for them, which is what we're seeing as a trend for these neoclouds. This was more so a question of, hey, whatever we had, we gave to the market and we got, compensated for that. But if we had more, we would have even given more. It reminds me of kind of how Amazon was talking about the AWS compute and how they just need more data center capacity to be able to even sell more of AWS. So they sold out of all their available capacity, 19% adjusted EBITDA margins, 355% year-over-year group revenue growth. And they've also secured about $4.3 billion in convertible notes in an equity offering as of September 2025. Now, the other reason I was really excited to finally buy the dip on Nebius, remember, I did a deep dive on the stock when it was at 130, so obviously I was getting interested in it. But one of the reasons I said I didn't want to buy it in my Substack when I published it about a week ago, first of all, the stock was at 130, kind of wanted a better opportunity. Second of all, is like I was just kind of confused about, can they actually get more of these hyperscalers to, sign on to their business? Can they actually get another Microsoft type of deal? Well, they got Meta. They got Meta today. $3 billion deal over 5 years with Meta. It's not as big as the Microsoft deal, but for me, and maybe it was just like a nitpicky thing I had, I wanted to know, is this legit? Can they actually get more deals, or are they just promising deals and saying, hey, we're going to get more hyperscalers, but it's never going to come through? Based on what I saw today, they are getting more deals, and it looks like, given the capacity that they have and how they're building that capacity going into 2026, it looks like they're going to get a lot more. It looks like they're going to get a lot more. So from that perspective, I mean, when you're trading at 3 times 2026 forward guidance, when you're raising guidance at the level that they're raising, when you're beating on earnings, and most importantly, when they're actually establishing a more holistic view of data centers, because there's a lot of other things that go into Nebius, like this new token factor, which I don't know exactly all the different implications of it, but that is very synergistic with what they're doing with the overall data center offering, not to mention their stake in ClickHouse. I mean, there's a lot of parts of the thesis. Again, I'll link my deep dive for those that want to read it. So I've understood Nebius, I would say, better than I have in the past ever since I've done the deep dive. I just, didn't feel at 130 after that big of a run, it was worth the opportunity to jump in. Seeing it red in the pre-market today after those earnings. I mean, I didn't buy immediately when I saw it was red, but then I'm looking at the earnings and I'm looking at the stock and I'm just like, wait a second. Okay, maybe this is like some better of an opportunity. And why is the stock down today? There could be a bunch of reasons, maybe some more dilution, maybe the entire market's red. I mean, there could be a variety of reasons, but those earnings should not be a reason why the stock is red. Same thing with Robinhood falling to 120 after earnings. Like, that made no sense. But I understood Robinhood, which is why I could confidently say that made no sense. For those that understand Nebius, you probably could confidently say that makes no sense. For me, I needed to do a little bit more digging. At the end, I concluded it probably makes no sense. So I'm in. I thought it was an incredible quarter. I am now part of this journey. I will try to do a lot more research on Nebius. Did not obviously establish a full position, so I'll be looking to buy on more dips and seeing kind of how the story plays out. But this stock was at 130 last week. Then it fell to 104. Then it went back to 130. So I do think the volatility in the stock is something people do have to be prepared for if they're in it. I am still not fully excited about the broader neo-cloud thesis. I've been pretty transparent on my thoughts there that I just think Nvidia and having exposure to that might be the best way to play the overall data center space. However, I like growth. And when you see this type of growth and you see the types of contracts again, they also got Cursor, which is one of the fastest growing startups to 100 million ARR, which is an AI coding assistant. When you see that type of growth and you see the type of management that's being able to steward that growth. By the way, the other thing I'll say is I really like management. I've been doing a little bit more due diligence. I didn't put this in the Substack, but doing a little bit more due diligence on Roman and the team and just trying to understand, can I trust these guys with my capital? I feel like I could trust these guys a lot more than the CoreWeave CEO, which, look, CoreWeave had a good earnings. That stock got downgraded across the board today, down 8.5%. We'll talk more about it, but kind of the key story is that they're increasing their debt load and the street's not happy about that. But just listening to Roman on the call versus the CoreWeave guy, I just feel like there's a little bit of a difference. Not to mention the valuation on Nebius feels way more attractive than on CoreWeave, especially because they just don't have the same type of debt profile. So that's why I'm in Nebius. And that's what we got. And I will do a lot more due diligence and give you guys more research on this, but I'm in. Let's call it a starter position. Let's call it, hey, stock's red after good earnings, and we'll see if it continues to develop over time. And that's what we got on Nebius. Now, I know there's a lot of different implications of what does this mean for Iran and all these other stocks. Again, I have not done super big deep dives on the Bitcoin mining HPC facilities. I will say at its core, from the analysis I've done on Nebius, it is just nice to have a more diversified player that didn't that wasn't a Bitcoin miner at one point and then transitioned because there's just a little bit more of a holistic offering. Not to say the Bitcoin miners are bad, just to say that I think there's a different type of moat that a company like Nebius has. But again, the whole point of investing in the space is that if you're an IREN and if you're an IREN from 20, I don't think it's going back to 20. Now it's at 60. Like, they've only leased out about 12% of their capacity. They have another 88% left that they can give out to the markets. And there's a lot of different verticals that I think these companies are going into. I just wanted to pick a name that I thought had a reasonable valuation and was putting up meaningful growth. And based on what I saw in earnings, I think that's what we got on Nebius. So there you go. Nebius crushed earnings. Congrats to everyone here. I know the stock's not super pumping. It is up 4%, which is nice. Maybe it goes down 4% as soon as the market opens, but I do think it was a quarter that was worth at least getting into. That's what we got on Nebius. Made a couple other buys yesterday, and then we'll get into SoFi and some of these other headlines with Nvidia and SoftBank. I bought Meta yesterday, folks. I bought Meta. So why did I buy Meta? Quick TLDR. The reason I bought Meta, very simple. I don't think I'm going to get the best price that I want on Meta. So a couple things. I know last week we talked about my friend who's long Meta and basically said, hey, you might want to wait a little bit before you start sort of nibble at the dip, because obviously the Zuck spending on CapEx is not going to be interpreted well by the street. I think he's right about that. And quite frankly, I think we might get an even better dip. I bought at 632 last night. But then I started asking myself after going through the numbers, okay, he's probably right that Zuck is spending carelessly on CapEx and there's no plan for the ROI. He's also probably right that waiting and getting some due diligence from the management on terms of where the trajectory is going into Q1 of 2026 would be like appropriate to do. But A, we're in a bull market. B, rates are coming down. C, Meta's already down 15% from the highs. For a Mag 7 to go down, 30% from the highs? It's possible, but there's got to be a massive narrative re-rating. And I don't know if that's going to take place. Like, I think it could take place. And if it does take place, I would be a lot more excited to buy Meta anywhere below 600. But if it doesn't, by the way, Meta was at 600 on freaking Friday when the world was collapsing. So the last time we got Meta to actually go down to such an extent was when the entire market was taking a dump, and then the market rebounded, and now Meta's back to 630. So 624 in the pre-markets. I do think it's worth setting up a DCA. I wouldn't buy everything that you wanted to buy of Meta at 630, but I think starting at 630 is not crazy, because at some point, if it gets below 600, great. That's a buy the dip. That's when I think it really becomes a generational opportunity. If not, it's like, are you going to wait until it gets to 500? And maybe that happens, but if it doesn't, then you're, fading a company trading at 19 times forward earnings, which is one of the most important advertising companies in the world. So look, we'll see what happens. Maybe this is too early. If not, then, maybe this is a good dip buying opportunity. But I do think as we get towards the end of the year and things start to shape up, I don't know if Meta gives us that easy opportunity down into the 570s. Maybe in 2026 if the entire market corrects. But right now, I think it might be harder. S&P 500 right there, down about 0.25%. Then you got Meta. That's down about 1.03%. Yes, the Meta chief AI scientist is stepping down. I kind of don't hate that. This guy was like really annoying from what I understand. And he was treated as a meme by a lot of the AI community. They also basically replaced him with Alexander Wang when they bought out his company 5 months ago. Like Yan LeCun was supposed to be like the core guy, and then Alexander Wang became the core guy. I still have my concerns on what the hell is going on with Meta and AI. Like, I don't know why they're spending all this money. I don't know why the hell they gave $15 billion to scale AI. That feels like a waste of money. There's a lot of competitors to scale AI that are doing way more revenue than. I don't know if Alexander Wang is the biggest AI name in the market if they did pay $15 billion for him. So I have my concerns. But then you look at Instagram Reels doing $50 billion a year. And it's like, okay, it went from 0 to 50 billion in 3.5 years. It's like, all right, so like, it's really hard to bet against Zucks. It just really is. And so even with those concerns, I think it's worth taking an opportunity on the dip. So that's what we got with Meta, and that's what we got with Nebius. New positions in the portfolio. Well, Meta I already had, but I bought at 659, so I guess you can say I DCA'd. Nebius is officially a new position. SoftBank and Nvidia. Okay, so let's talk about this news. I don't think this is that big of a deal, but nonetheless, it is a headline that is crossing over the news this morning. SoftBank sold their entire stake in Nvidia for $5.83 billion. Again, SoftBank, if they held on to Nvidia back in 2019 when they sold the original position that they had, or at least a good chunk of it, they would have had a $250 billion stake in Nvidia. And I think that annoys Masa-san a lot. But nonetheless, like, money to fund all their other bets, and they got to get the money from somewhere. Nvidia, probably one day is going to be worth more than what it is today, but maybe it's a $10 trillion company. Okay, is Masasan going to hold for a double? Probably not. So I actually think logically it makes sense for them to sell the stake. It's just if they held on from 2019, they would have had a better stake. And so I think they think if they can put this money into something else that could compound in a much more aggressive way, that'd be a better use of that capital at the moment.
About AI valuations, and they worry, is it a bad sign that SoftBank are actually selling off their Nvidia stake?
That's a big question here. Yeah, Masayoshi Son decided that he's going to sell off all of his shareholdings in Nvidia at this point and take the $5.8 billion that he made from that stake. Now, we just got the conference call from the company in Tokyo just a few minutes ago, and there the CFO said that that's actually not the case. It's not because they have any questions about Nvidia or Nvidia's growth prospects. Instead, what they really need is they need that money to be able to make their own investments. They want to invest in AI in a number of different areas. They're partners with OpenAI, of course, in the United States, with his Stargate venture, where they plan on investing $100 billion, maybe $500 billion. We've also heard plans about an Arizona manufacturing facility where they want to invest hundreds more billion dollars. So
they need the money. They need the money to put into different places, and it looks like they're getting more into these data center infrastructure investments. Speaking of data centers, and again, going for the bull case for Iran, Nebius, all those companies, Microsoft today said they're going to do 10 billion of data center investments for AI infrastructure in Portugal. And Google today said they're going to do 5.8 billion of data center and infrastructure investments in Germany. I mean, over and over again, you're seeing, I know we had a little bit of a hiccup last week on this sort of AI CapEx trade in. Oracle's now back to levels that it was at in September. And I think it's fair to be skeptical. We had Michael Burry yesterday basically say everything's a bubble and expect something big on November 25th. I don't know what he's coming out with, if it's a book, if it's more analysis, or we're going to see what happens. But, Michael Burry is concerned about depreciating assets and what that means for overstating earnings. And those are all concerns that are worthwhile to discuss. At its core, you cannot deny the amount of investment that is going into these data centers from these hyperscalers. And these hyperscalers are going to need the neoclouds to help them facilitate all the transactions on these data centers. I think SoftBank understands that, and that's why they're getting excited to invest in these data centers. On top of that, SoftBank just put in $35 billion into OpenAI. They need that money from somewhere. And I know they're raising debt to be able to finance their investment in OpenAI. I mean, that's how confident they are that OpenAI is going to work out. But they also need liquidity. And so, I mean, look, again, if Nvidia can go to 10 trillion, that'd be amazing, but it's going to take time for that to happen. And the question is, do they hold on to that stake for a double if OpenAI can potentially quadruple over the same time? And so I don't think it's bearish. I think it's just something they have to do. And if you're managing that much money, you probably would want to navigate by doing the same thing and taking some profits. But that's what we got on SoftBank. Yes, AMD will have a big analyst conference later today at 1 p.m. as well. I will not be streaming that. I think Jose will be streaming that. And so we'll get some updates from what AMD says later today, and we will keep going from there. So Nebius earnings, crushed it. Bought the dip on Meta last night for myself, and SoftBank selling their Nvidia stake. Again, Nvidia having one of the best days they've had since April. 6% move on Nvidia. That's why I think we're right in the pre-markets. I think honestly, we just need a little bit of a breather, and you got Nvidia taking a bit of a breather right there, down about 2%. Google as well, that is down about 0.5% in the pre-market. Okay, real quick, let's talk Grab updates, and then we'll get into SoFi. So the story is getting very, very juicy on Grab. Don't want to spend too much time on it. I'll make a longer Twitter post later tonight. I'm also making a video on my Grab update on earnings. That'll probably be out tomorrow. The TLDR is that yesterday we talked about rumors about Grab and GoTo potentially getting ready for an acquisition. There was an actual state official from the Indonesian president office saying that they want Grab and GoTo to merge. Not the GoTo part of the fintech, not the fintech part of GoTo, but rather the ride hailing and delivery part, which would be very accretive to margins because right now they're in a price war, and that's why the margins kind of suck on both companies. Obviously, GoTo has not really returned well for shareholders. Grab is starting to return for shareholders. Grab is much more of a dominant business around Southeast Asia. Last night at 10 p.m., Bloomberg comes out with a post, speaking of SoftBank, which has a stake in both of these companies, a pretty heavy stake. I think it's almost 10% of each one. SoftBank joins move to oust the GoTo CEO, paving way for Grab deal. I mean, this is becoming like a Netflix show in regards to kind of how ruthless corporate capitalism is done. Several GoTo shareholders signed a memo to the board requesting an extraordinary general meeting on December 17, 2025. People familiar with the matter said, asking to not be identified. The backers, which include some of GoTo's co-founders, are proposing a vote on matters including replacing the CEO, who oversaw a more than 40% decline in his tenure, aka the stock was down 40% over the past 5 years. Walujo is also perceived as opposing a takeover by Grab, the people said. So basically, you have a bunch of shareholders that are significant executives or significant stakeholders in the company signing a memo, including SoftBank, to get rid of the CEO because of two things. A, the CEO has not been able to get shareholder returns because the stock is down 40%. And look, Grab has not been the best performing stock since the SPAC days either, but Grab's numbers are going like this, even if the stock is flat. GoTo's numbers are going kind of like this, and the stock is just going down. There's just like no trust in the business, not to mention the corruption case that the GoTo founders were involved in earlier this year, where they were stealing money from the government that was supposed to be going to Google notebooks for underserved children in the region, and they started pocketing the money for themselves. I mean, just like disgusting use of corporate ties to the government. And as a result, you've got a lot of people from a brand perspective that are just not fans of GoTo. That CEO apparently is opposed to a Grab takeover. So you've got a lot of shareholders that are voting to get rid of the CEO and to potentially introduce the opportunity for Grab to take over, given the CEO is afraid of the company taking over. Obviously, he's opposed to that taking place. So now there's going to be an extraordinary general meeting on December 17, 2025. I don't know if the CEO is going to be ousted. I don't know if Grab's officially going to enter into a binding agreement to acquire them. All I know is that if Grab gets them for hopefully $2 billion or less, I would not want to pay more than $2 billion for the ride hailing and delivery part of the business. I don't think it's worth more than $2 billion. We are going to definitely accelerate revenue and GMV growth into 2026. Now, again, you can't guarantee that's going to happen. That can't be the core investing thesis. But we've had rumors over the past 12 months that this acquisition and this merger will take place. This is the most significant update for SoftBank, which has a big stake in both companies, to now say we need to call a meeting and see, if we can get something done, because obviously SoftBank is annoyed that their stake has been diluted and, not really returned that well over the past couple of years. It makes sense that they would want to get them to work together. So I like it. It would be good for Grab, obviously strong for shareholders. Maybe that explains some of the dark pool orders we've had and the billion shares of volume we had in September. Maybe a lot of the institutions knew that this was going to happen and they were a little bit early to the story. But if this is happening, it's a complete narrative re-rating. And this is the most significant development we've seen over the past 7 months that it seems like it's going to happen. It's just a question now. And if the CEO remains a CEO and if he's gone and SoftBank puts in a new CEO, does that new CEO work with shareholders to make an acquisition happen with Grab? But we're going to see how that plays out. So that's what we got with Grab, and that's why that stock is up in the pre-markets. China is considering a plan to keep rare earth magnet materials from reaching U.S. military users by blocking exports to military-linked firms while speeding approvals for civilian companies. So we've seen China start to capitulate to a lot of the United States demands over the past couple of weeks. Obviously, we have that deal with the Chinese, at least a framework for a deal in terms of being able to export rare earth minerals and metals. I can understand if the Chinese don't want that stuff to go to the United States military. I don't think the United States would be that happy about that. So that's one thing that I think we have to keep in check. But over the past couple of days, you've had the U.S. take down our tariffs on China, particularly on fentanyl. You've had China get rid of the export controls. Maybe there's certain types of export controls they're not getting rid of. But it is at least a healthy form of dialogue and action that we're seeing with China and the U.S. And, that's not a bad thing to at least see the tariffs start to go away from both sides. But if the Wall Street Journal is correct on that, then that might be a new development in regards to how rare earth magnets are going to be going to the U.S. military. No, on CNBC, here's what you have to say. SoFi is officially bringing back crypto.
On its platform, joining us right now, first on CNBC, is SoFi CEO Anthony Noto in town. Nice to see you, sir, in person.
Good to see you as well.
Okay, so what's going on here? This is a big deal.
Yeah, this morning,
a very big deal for you.
It is a very big deal. It's a big day and a big milestone. Reverses the course of time.
It does.
We've wanted to be a one-stop shop for all your financial services needs, and one of the holes we've had for the last 2 years was in cryptocurrency, the ability to buy, sell, and hold crypto. We were not allowed to do that as a bank. It was not permissible. But in March of this year, the OCC came out with an interpretive letter that it's now permissible for banks like SoFi to offer cryptocurrencies. So this morning we're launching as the only national bank, the first and only national bank, the opportunity to buy, sell, and hold cryptocurrencies like Bitcoin, Ethereum, and Solana.
So I was going to ask, are we just talking about 3 for now?
We'll expand well beyond 3. It'll be a pretty broad assortment. We try to differentiate on being fast, having broad selection, great prices, ease of use. So we'll try to give members, SoFi members, as much selection as they would like.
And what's the difference between going through you and going through Coinbase or going through Robinhood or somebody else?
Yeah, there's a couple of really big differences. First, we're a nationally chartered bank, which means we have the infrastructure, the processes, the financial conditions that provides the safeguards that a consumer would expect from a bank, which is going to allow us to scale responsibly. The second thing is because we are a one-stop shop, you can do all your banking, checking, and savings at SoFi, your borrowing, and your investing, and now crypto. And one of the unique things about that is when you come to SoFi and fund your crypto investments, you'll fund them in a SoFi checking and savings account. That checking and savings account's deposits earn interest.
Say that again. You're going to fund it with crypto?
You're going to fund
your checking account.
You're going to fund your checking account with cash.
Okay.
And then when you buy Bitcoin or Solana or Ethereum, the money will come straight out of your checking and savings account. So when you're not putting cash to work, it's not sitting in an account that earns no interest, and it's not sitting in an account that's not insured. So the money will sit in an FDIC insured account. Up to $2 million is what we offer. And when you buy, it will instantly withdraw from that account and send it to the marketplace.
Okay, so here's a question. This seems novel in this moment. If we're sitting here a year from now, given this OCC decision and every other bank in this country, how novel will this ultimately be? Meaning, do you imagine Bank of America and JP Morgan and every bank, Wells Fargo, all the big banks and everybody else will be doing exactly this?
I don't. And a couple of reasons for that. We're the only digital one-stop shop. They do not offer the breadth of products that we offer across borrowing, saving, investing, protecting, and spending. So we have the ability to not just buy cryptocurrency, but we're now providing the ability to send payments internationally via the Lightning Network, which is a crypto network, and we'll add others to that.
Why can't they? Why can't some of these sort of more traditional legacy banks do the same thing?
They'll have to answer why. I fundamentally believe that we put the member at the center of that. What we do, when we focus on these things that are activities to do with your money, not products. And so the SoFi Money account is an account that you can use for international remittance. You could use for self-serve wires. You can now use for crypto buying. You could use for paying friends via an email and Zelle. And so the whole idea is to leverage technology to make moving your money as easy as possible, but also doing all the other things you need to do to get your money right.
Let me show you. Can we just put Bitcoin up on the screen for a second? So we're at about, what, 105,000 today? I don't know where we were.
104 and change.
So what do you make, though, of how your new your clients who may be buying this should be thinking about this? Should it be digital gold? Should it be a speculative asset that they're sort of trading? What do you think of this?
The first thing is we've asked our members what they want, and 60% of them have said they would like to invest in crypto, but they want to do it from a regulated entity like a bank, and that's what we are, and so that's one differentiation. The second is it is a highly risky asset. It should be a very, very small piece of a total portfolio, and people should dollar cost average into it and make sure they stay very diversified. Because it is risky and it is volatile, you could lose all of your money, and we want to make sure that our members understand that. But they do want exposure to that, just like people wanted exposure to Amazon back in the mid-90s. Risky, now it's $1 trillion company.
What is your exposure to all of this in terms of the risk to the system? If everybody were to do what you're doing, what kind of exposure would ultimately the taxpayer have if all of this, if Bitcoin goes from this to, loses 50% of its value?
It's like any asset. If it becomes overvalued, that risk increases increasingly over time. If there's a lack of liquidity, that risk increases, and those are all things members should understand. We provide education on the platform. In fact, when we used to provide cryptocurrency investing, we would have a warning just before you hit buy that said, this is a risky asset, you could lose all of your money. In our press release, we say that exact same thing today. So it's just another asset that's not proven over the course of centuries, that will take time to level out and become more stable from a price and valuation standpoint.
Can I ask, does the Noto family invest in crypto right now?
Yes, we do. I have about 3% of my investable assets in cryptocurrency.
Mostly in Bitcoin, or what's the?
Mostly in Bitcoin.
And we were.
Noto crypto, bro. 3% of his net worth in Bitcoin. I mean, or not net worth, but investable assets. I mean, that's pretty significant coming from him as a CEO of a company that wants to officially offer crypto to everybody.
Really?
I was not super early. We've done perfectly fine. We have exposure to it because, one, I believe we're investing in a technology, not in a currency. The analogy I use with people is, imagine if in 1990 you could have bought a piece of the World Wide Web through some coin called the World Wide Web coin. It's very similar to that. These are networks, they're communication networks used for payments and other applications.
What do you make?
It is just so cool to see these high profile CEOs make these type of analogies. I mean, like, I know the Bitcoin price action has not really been the best over the past couple months, but like some of the smartest people in the world just are convicted that this is going to matter. And over the long term, you know, they kind of don't care. They just want to have exposure to the asset.
Talking to Kathy Wood, was it just this week or last week? I guess it's Tuesday. Last week we were talking to Kathy Wood, and she, you know, has had a very sort of sky high valuation for Bitcoin. I think it was $1.5 million she thought it could ultimately get to. She took that down, interestingly, last week and suggested that the success of stablecoin is so much higher than she thought that in some ways stablecoins for transactions could ultimately crowd out Bitcoin that might have been used for that.
Big picture, we believe blockchain and cryptocurrencies are a super cycle, technology super cycle, just like AI, and it will be pervasive across all the financial system. Stablecoins is one example that will fundamentally change payments. SoFi will launch SoFi USD, hopefully in January. That will be backed dollar for dollar by reserves. Because we are a bank, we'll actually put the dollars in our Fed bank account, so we'll have no liquidity risk, no credit risk, and earn Fed funds. That's a really attractive vehicle for people to use digital currency for, and that will compete with other digital currencies. It's not clear who will be the winner. Stablecoins are one example, but if there's a huge proliferation of stablecoins and they don't have the liquidity that I mentioned, they don't have the credit risk and duration risk, that could become a very risky asset also.
Should we worry about stablecoins in the following way, which is that hopefully if the stablecoins are backed by something meaningful like treasuries, that effectively takes treasuries out of the game to be lent in a different way?
Yeah, I actually worry quite significantly about stablecoins from operators that are not banks. Where are the reserves sitting? Is there duration risk for those reserves? Is there credit risk for those reserves? Are those reserves bankruptcy remote? SoFi, the answer to that is zero credit risk, zero liquidity risk, and working on bankruptcy remote. That's three elements that you have to think about with whatever stablecoin you use. Just because it's backed dollar for dollar doesn't mean those dollars will be there when you try to liquidate, just like a money market fund that breaks a buck.
We got to go. This is great. You want to put it?
All right. There's Noto, and those are his thoughts on SoFi. Now, look, I think it is very impressive for SoFi to officially have crypto coming back to the platform. I think earlier this year, right, around February, March is when the OCC came out and said that banks are going to be allowed to trade cryptograms. And, you know, I don't know how many people thought they were going to be able to do it in about 8-9 months, but it seems like they did what they had to do. They got the job done. Obviously, the Trump administration, from a deregulatory perspective, also made it easier for them to get on board with this. And they got it done. So crypto will be coming back to SoFi. Tanner yesterday said on our Tech Bros podcast that SoFi is going to be charging 1% as a fee on their crypto. So it's less than Coinbase. It's a bit more than Robinhood. So it's kind of in the middle right there. And they're probably not looking to undercut Robinhood. They're probably just looking to charge a standard 1% fee. And, you know, we're going to have to see what the crypto volumes look like on the Invest platform over time. The one thing I will say is that this is not bearish. SoFi right there, $30.43. It was up 9% yesterday. When you have more offerings on the platform, especially offerings for assets that people really care about, obviously like cryptocurrencies, Bitcoin, Ethereum, Solana, I mean, people are going to want to trade it. And if people start trading it on SoFi, if you already have all your banking and financial assets on the platform, you might start buying some stocks. You might start trading some options. That's not their core business, but at its core, if you have all that integrated in the ecosystem, that's definitely bullish. So I think it's good for SoFi to do this. I think a lot of people have been waiting for this. The real hardcore SoFi power users that use the Invest platform as well and the banking probably wanted this option. I mean, you might get some assets leaving companies like Robinhood to go to SoFi now that they finally offer crypto. But it is kind of funny. SoFi is bringing crypto, Robinhood's bringing banking. So it's like both of these guys are going into different perspectives to try to compete with each other. And, you know, consumers are going to figure out which product they ultimately want to use long-term. So that's what we got on SoFi. Very bullish as crypto has now come to the platform. I hate Nate so much. So who listened to daddy? Nate, I hate you so much. But yes, I am in Nebius now. For those that missed the news, I'm in it. I got in at 110. I saw the dip in the pre-markets. Didn't make sense to me. based on those earnings. And I'm in the name. Nate, I wish you told me about it at 65, though. I don't know why you started telling me about it at 130. He was blowing up my line every day, like, yo, you got to look into Nebius. Like, bro, it was at 65 like 4 months ago. Why didn't you send some text when it was at 65? Why are you bugging me at 130? But officially in. You can rewind to the beginning of this show when I talked about Nebius and why I got in. I'll probably put out some more content later. Again, I did do a deep dive on it, so obviously I was interested around 130. Just didn't want to buy at 130. A deep dive linking right there in the chat. And I think as a neocloud, it's probably one of the better neoclouds that's out there. And this is my only exposure to data centers outside of Nvidia. I mean, I guess you could say the hyperscalers are a form of exposure, but in terms of direct exposure outside of Nvidia, Nebius is the one. And again, given the deep dive that I did a couple of weeks ago, if I feel more convicted to build on that position, like I was thinking of, okay, in 2026, is it going to be a spray and pray approach where it's like I throw money at Nebius and I run at Cypher, yada, yada, or do I consolidate? And my personality, you guys know by now, is more of consolidating. So it feels like Nebius is going to be the one I consolidate on. Again, it's not like, oh my goodness, this is the next big thing is going to the moon. I'm super sold on it. It's, hey, I've done my research, at least at a preliminary level. I see the earnings. I had two things that I really want to see: increased guidance to the point where they're trading at 3 times forward revenue, which just feels stupid for their growth. And then 2, the Meta hyperscaler deal. I really want to see another hyperscaler that they can get on board. And then 3, I needed a dip. All 3 of those things happened. So at that point, I have to ask myself, why am I not buying? And so that's why I bought in the pre-market. But for me to increase the position, I'm just going to have to get even more convicted. And that's going to take more due diligence. But I'm on the train with Nebius. More, thank you for the super chat. Hey, Amit, I'm looking to initiate a position in Duolingo today. I'm curious for your perspectives. Appreciate your work as always. So I did a deep dive on Duolingo as well. More, thank you for the super chat. I'm linking that right here in the chat. I think Duolingo has a moat. I know that's controversial to say, given how the price action has been playing out over the past couple of months. However, I am not buying this name. And in the deep dive, I go a little bit more deeper on why I'm not buying. Number one reason is I just think the narrative on big tech commoditizing their AI offerings is a little tough for them to overcome. Now, technically, that should be why people are buying. If you're a Duolingo bull and you've been waiting for a position, I mean, it's down more than 50% from the highs. Like, this probably is the time where you have to nibble. Same thing with Meta, right? The reason I bought Meta yesterday, and I talked about it earlier in the show, is like at the end of the day, I don't think I'm going to get below 570 on Meta. Maybe we get below 600, but like, at that point, I would just DCA. Am I going to get some amazing entry at 550, 575? Maybe. I just think the odds are low given how good of a quality Meta is. And so if I want to get exposure to a hyperscaler that's down 15% trading at 19 times forward earnings, at some point you got to nibble. Duolingo, you've got to be able to deal with that AI narrative from the hyperscalers, big tech commoditizing what they're doing. I don't think that is going to be the depth of Duolingo. I really don't. And I made that very clear in the deep dive. I just think the narrative is not strong enough. And their multiple is not like, it's not like Meta trading at 19 times, right? Like even after the drop, their multiple is attractive. It's not that attractive. I think when you have a stock that's richly priced and you have a bad narrative on it, and it's not like Google DOJ narrative where Google's a $2 trillion company. When the DOJ eventually lets go of the court case, Google can go to the moon. Duolingo is a relatively small company that has a narrative that's really imputing the ability for the street to recognize that this is going to be a broader player when it comes to language learning that's not commoditized by AI. And that's why I'm not buying it. I don't think it's a company that's going to be dead, as some people are permitting over the next couple of years. Like, I think their user growth and their overall top line revenue growth is just too strong. Having said that, it's tough to hold it onto the portfolio if you think that narrative is going to cloud some of the judgment. So I put out that Substack again. I'll link it right here. And more, thank you for the super chat. You can read through this and hopefully get a better perspective on it. Earnings yesterday. So what companies crushed it? Well, Rocket Lab is one of the companies that crushed it. Rocket Lab right there, up 7% in the pre-markets. They are 3 cents away from profitability, which is very exciting for a company like Rocket Lab. They are getting close to being profitable. They also beat on revenue. So I think if you are a Rocket Lab shareholder, you are definitely happy with those earnings yesterday. As you can see right here on Rocket Lab, they beat by 70% on EPS. They beat by 2% on revenue, negative 3 cents expected, and then 155 million. Revenue's up 48% year over year. EPS is up 70% year over year. Big Bear AI, they are also up in the pre-markets. Again, they are growing negative 20% year over year, but the street doesn't seem to care about that too much because they beat by 57% on EPS, beat by 4% on revenue. They are continuing to guide for 140 million, which would be down about 30% year over year in terms of the fiscal year guide. So they have not upgraded their guidance. They did acquire a company yesterday. They paid $250 million for a company doing 25 million in revenue, 100,000 customers and governmental agencies. So maybe that could increase that revenue guide going into 2026. But overall, perception is reality in the stock market. And the perception was that Big Bear AI would do way worse than expected. And they beat by a hefty margin, beating EPS by 57%. That's why that stock is green. CoreWeave, let's talk about that real quick. What is going on with CoreWeave? I can only conclude, given they beat by 57% on EPS, negative 22 cents versus 51 expected, and then 1.36 versus 1.28 billion. Again, revenue's up triple digits, EPS is up 88% year over year. My only conclusion after listening to the call yesterday, and some of you guys were with me listening to the call, is that the debt profile that they are guiding for, even if they say they're guiding for increased debt via demand-based debt, so they're trying to soften the blow that they're increasing debt because they're saying it's from demand, which is like a reasonable argument, is just becoming a little aggressive for the street. They lowered their fiscal year 2026 revenue guidance, back got the street upset, and they lowered their adjusted EBITDA guidance. Now, that's not that big of a deal, and it's definitely not a sign of demand is going down, but if you're lowering guidance and you're increasing debt, even if they might be lowering guidance just to be able to beat and raise going to 2026, I think that's why the street's a little upset. Also, the real kicker for why their stock got hit is because there was something that is going to delay one of their clients setting up a data center. I'll see if I can get the exact quote, and that is causing a little bit more pain. JP Morgan downgraded them to 110 from 135. You had a couple other firms downgrade them into the 100s. I don't know if it needed to be that aggressive of a downgrade, but nonetheless, that's what happened today. Here's the quote. We are affected by a temporary delay by a third-party data center developer who is behind schedule. They did say that that delay is not going to decrease the margin profile on the customer, and that it's within 5% of what they already guided for. So it's not like a substantial delay that should be hurting the company. But I think the street's just annoyed that all these companies are taking on debt, and CoreWeave's the next one to take on a massive amount of debt and increase that debt load. And maybe that debt load is becoming a bit too substantial, even though they doubled their revenue backlog to 55 billion, which is net bullish data centers, AI in general, because there's so much demand. It's just CoreWeave as an operating business, even though they're 20 cents away from profitability, is something that the street is struggling with to deal, to analyze with, just given the level of debt that they're taking on. Debt to equity ratio, at this point now well over 300%. So yeah, I agree with Yeo in the chat. The call was good until they mentioned the delay. I agree. And ultimately, I think the increasing of the debt is just something the street is thinking about. Is it a buy the dip? I don't know enough about CoreWeave to buy the dip like I know about Nebius. Again, I did not do a deep dive on CoreWeave. I did do a deep dive on Nebius, which is why I think, Nebius red on those numbers is worth buying. But ultimately, we're going to have to see how this ends up playing out for CoreWeave. We got 2 minutes until the market opens. Here's Basent this morning on tariffs and why they are net positive for the consumer.
That the tariffs help consumers because we are able to, if you go back and look, they brought down the budget deficit. And MIT came out with a study that said that 42% of the great inflation was caused by the big deficit spending. So as you bring down deficit spending, inflation will come down. And the tariffs, right now we take in substantial tariff income. Over time, that will rebalance as the factories move to the U.S., and that will become the corporate income or wage income. And by bringing down the budget deficit, we are bringing down inflation. I think that the tariffs.
So Trump tweeted last night about the Supreme Court decision. Again, I've been telling you guys from what I've been reading, it is not confirmed that the Supreme Court is going to go his way. And we got about 40 seconds till the market opens. Trump was pretty upset last night, and he basically went off on how people need to understand more about tariffs. He said the U.S. Supreme Court was given the wrong numbers. The unwind in the event of a negative decision on tariffs would be including investment made to and return of funds in excess of $3 trillion. It would be not possible to ever make up for that kind of drubbing. That would truly become an insurmountable national security event and devastating to the future of our country, possibly non-sustainable. So obviously Trump is trying to warn the Supreme Court, saying, hey, if you guys get rid of the tariffs, it's going to be a $3 trillion windfall for the United States. And that's why you have Basent as well explaining why the tariffs, are something that we do need to care about more going into the long term. All right, folks, there you go. We got about 10 seconds until the market opens. Thank you, everybody, for being here. It is Tuesday, November 11th, 9:30 a.m. The stock market is now open. All right, wake your ass up. Let's get into it. CoreWeave down 9% on the day, goes red. Nebius up 1.682%. I think it got to a lows of 108 in the pre-market. Right now at 111. That's up 1.34, slightly green. CoreWeave is getting hit 9% right there. Duolingo down 1%. Grabby Grab gets a 5% move. I think that 5% move is obviously based on this rumor that they could be acquiring GoTo. So you got to see if that is sustainable, but it is getting a bit of a move right there at 620 on Grab. CleanSpark down 5%. They diluted by 1.15 billion yesterday. That's why CleanSpark is down. They're using 420 million of the 1.15 billion to buy back their stock, which it always confuses me when companies dilute to then buy back their stock. But nonetheless, that's what CleanSpark is doing. That's why that stock is down 5%. Beyond Meat, that's down 5.6%. Beyond Meat had a horrible earnings. Again, I understand there's a retail cult, but they missed on EPS by like 40%. Gross margins are basically negative. Beyond Meat right there, 1.26. That's down 6%. Amazon, that's flat. Open Door. The CEO said he and his family are buying $1 million worth of stock today. Quite literally, the CEO yesterday tweeted that he and his family are buying $1 million worth of stock. JP Morgan upgraded them to $8. So I think you put two of those catalysts together. That's why that stock is back to 8, and that's green. Amazon, that's flat. Cypher, that's down 4%. Rumble, which is trying to get into the data center space, that's down 2%. D-Wave is down 2.4%. Big Bear AI up 13%. It was up 20%, so it's giving away a little bit of the gains from the pre-market, but that one is still green. Where is Nvidia? Nvidia 194, that's down 2.26%. Meta, that is at 626, down about 1%. Tesla, that is at 440, down about 1% as well. The Qs are down 0.39. Zeta down 0.35. Ethereum has been basically holding 3,500 over the past 3 days. Did get to 3650 at one point. BMNR 40.81. That's down about 1% on the day. CleanSpark again down 7%. Street really not liking that dilution move, and you're seeing the pain right there in the stock as it continues to go down. 1382. Google at 288. DraftKings down about 0.5%. Rigetti, they missed EPS by 933%. That stock is down 6%. By the way, TeraWulf missed EPS by 2,163%. TeraWulf down 6.8%. So you got a lot of these names that, obviously are not putting up massive earnings growth, but their stock's down about 4 to 5%. VG, good earnings yesterday, down about 4%. Archer down 1.8. Archer now below $9. Joby down about 1%. Accelera down another 5.7%. Trade Desk, that one's actually kind of green. And then SoFi still holding 30, which is nice to see. Is Nebius tanking? Do we get to really buy Nebius? Okay, 108. There you go. I think we got a red day. I mean, we'll see if this reverses. Grab is holding green, but Grab honestly should be red because the entire market's red. So the fact that it's holding this green means that the rumors of the GoTo acquisition are really strong. But it would not surprise me if Grab goes red because it's just hard for it to hold green if the entire market is red. ASTS, they did 14 million in revenue, $1 billion in contracted revenue. It was a decent earning. They did miss on the top and the bottom, but you got a 1.74% move on ASTS. S&P 500, although we got a red day, is not that red. It's down 0.7%, still holding 680, which is pretty nice to see. Rocket Lab right there was up 11%. Now it's up 6%. Again, Rocket Lab, great earnings, but do I think it can really hold a massive green day on a day like this if we end up going red for the whole market? Probably not. A lot of these names end up just trading with the broader market, and you might see some more pain right there. Duolingo 192. Iran, that's down 2.68. ASTS back to 70 after a couple weeks, so holding on to that 70 level. Open Door, that's up 2%. And then Amazon going green as well. Maybe it's too early to say if we're going to have a full-on red day. I'll put the poll in the chat. But obviously, we are seeing some red as we get into it. And honestly, I think the red is kind of healthy. Yesterday, I didn't expect a % move on the S&P 500, but we got it. I also didn't expect a 6% move on Nvidia, but we also got that. So, I mean, I kind of think it's okay for the market to take a breather a day after a massive move, especially because the week before it was a massive move down. So, you probably want to have this consolidate. Palantir, 191. Palantir got to 194 yesterday. So, Palantir was at 169 last Friday, now back at 191. It is nice to see Palantir making that rebound back into the 190s. Weeble's down about 2%. Chipotle's down 0.5%. Hims has not been able to make a move back above 40. AMD right there, 244. And then Lemonade, that one is also flat. Where is CoreWeave? Again, I don't think they deserve to be down 11%. I don't know their business that well, but there were some red flags in the earnings, but those are red flags that every investor should already know about, especially if you're concerned about their debt. So I feel like there's something else in the earnings that maybe I'm not looking at for why the stock's getting hit. Let's read one of these updates. DA Davidson says underperformed. They have a $36 price target. We reiterate our underperform rating and $36 price target following the 3Q earnings that were highlighted by another quarter of deteriorating profitability, significant downward revisions to full year CapEx revenue and profit guidance. We continue to believe this business is not worth scaling. Wow. That's a pretty ugly downgrade from Gil Loria at DA Davidson. And then we'll get the JP Morgan downgrade as well, but the street was not happy with this. Down 11.2%. Tesla right there at 441. Lilly is getting close to being a $1 trillion company. 917 billion. That's green at 971. Did hit 982 at one point. Apple. Where's Apple? Apple is at 270. That's slowly getting green. Oscar again is up 2%. It was down 17% yesterday because of this ACA subsidy debate that is now extended to January. So I think the healthcare names, especially the ones that are affected by ACA subsidies, you really got to be careful with them going into the new year, because you just don't know how the Democrats or Republicans are going to come to a conclusion. I mean, quite frankly, what if the Democrats can't get their way? What if they can't extend these subsidies? Or what if they do extend the subsidies, but it's only for like a year, and then the sort of trajectory of earnings growth gets downgraded for Oscar or for Elevate or some of these companies? So I don't know. I think there's a lot of different nuance to this debate, but it really does rest upon these healthcare subsidies making sense. TeraWulf right there at 1347. That's down 5%. Bitmine, that's down 2.3%. Nubank, they have earnings very soon. Nubank right there, 1639. That's up 2.39%. I think that's a 52-week high for Nubank. ARM, what do we have on ARM? ARM is at 150. That's down 2.5%. Again, SoftBank owns the majority of ARM. SoftBank also sold their Nvidia stake, not because they are bearish, but based on what they said on their earnings call this morning, it's because they want to fund their other AI endeavors, which to me makes sense and is not the craziest thing to see. Grab right there, still holding 5% at 619. Again, the rumor here from Bloomberg as of last night is that the GoTo CEO is going to be ousted by the SoftBank group, and that will create the conditions for a merger between Grab and GoTo, which would be freaking crazy if that happens, because I think that solidifies Grab as a behemoth in Southeast Asia. And it's something we've been talking about for the past 9 months. I kind of gave up on the thesis over the past couple of months because we just didn't hear much from it. But based on the developments over the past week, like, I was bullish Grab before I heard they could possibly acquire one of their largest competitors that has 100 million users in one country alone. Now I'm like, if they actually get the deal done, I mean, I think that really solidifies their presence in the region and gives them the ability to become a compounder for the next few decades as they consolidate control. So it would be very nice to see if that happens, and that's why I think the stock is up 5%. S&P 500, 680 right there. Intel, 3806, that's down 1%. Amazon somehow goes green, even though the other hyperscalers are red. Whereas Microsoft continues to be red, 503.58, but Amazon is green. Are we dumping Nebius? Are we dumping? I mean, all right, let's buy some more Nebius. Let's do it. We're in the position. I would love low 100s, but 108. We're going for it. We're buying more. All right, 100 shares, 108, 108.40. 108.40. So we bought 100 shares in the morning at 110, another 100 at 108. I'm thinking overall size of the position, long term, probably 500 shares, and we'll wait for those extra 300 shares if we get this thing actually into the low 100s. The earnings were good, dude. I mean, I don't see the red flag in the earnings. I'm sure there's red flags on the overall thesis that I probably don't know about. But on those earnings, I don't think the stock should be down. I think the stock is down with the broader market. And that's why Nebius is down. And they get used to the Nebius price action. This thing loves swinging. Well, that's also why the volatility on the covered calls is probably really good. I haven't looked at the covered call premiums. I would imagine. Is anyone running active calls on Nebius? I feel like you could do 0.2 deltas a month out and still be able to get a decent return, which is not the craziest strategy. I want to keep my Nebius shares, but if I can reduce my cost basis by a couple bucks every month, I also am not opposed to that. So granted, when it swings higher, that's when they can get into jeopardy. But I'll take a look at the covered call premiums. They're right there. Nebius still down 2%. Intel down 1%. The Beyond Meat down 8%. Wow, a bunch of you guys are doing that. Huh. Okay, a decent amount of you wheeling this name. All right, I will look into those covered call premiums. That I really haven't looked at. I didn't buy it for the premiums. I bought it because I actually want to own the stock. But if the premiums are decent, that is a plus. Where is Apple? Apple's still holding 271. That one going green. Oklo, they have earnings today. Oklo is red, down 2.7%. Again, I don't think they're going to put up any revenue or earnings today, like EPS. So the street already knows about that. We just got to see how the street reacts to it. VG still down 5%. Then EOSC Energy, that one is down 4% as well. Sam says I sold 170 monthlies when it was at 135. Haven't done it since then. Yeah, I don't know if I would sell calls at 108 on Nebius, because I feel like given how volatile it is, it could bounce back to 115 or 120 anytime. But, if it really dips into the 100s, then we'll see if it's worth buying more than selling calls on it. UNH right there, 322. Where is Iren? Iren is at 58. That's down 3.4. Novo's getting a move. Novo, I think a lot of people have been waiting for it to get a move ever since Lilly and Novo announced that deal together. Lilly ended up pumping, Novo dumped last week. Novo now getting some green. And then Oscar coming back to life a little bit from 1450 here to 15. CoreWeave, are we still red? CoreWeave, wow. It bounced a little bit off 92. Let me see if I can get another downgrade on CoreWeave. JP Morgan says, we continue to see tremendous long-term opportunity. On the negative side, the new variable supply chain pressures escalating to a point that they are impacting one specific third-party data center, which is running behind, and that shifts some of CoreWeave's Q4 revenue. This means that they are not only major hyperscalers being forced to issue capacity-constrained revenue guidance, but the phenomenon is also spreading to CoreWeave, which has historically set one of the highest bars for orchestration and delivers timely deployment of modern AI data centers. This doesn't seem that bearish. They're kind of just annoyed that Q4 revenue is going down because of the delay on the third-party data center developer. They downgraded them from 135 to 110, but that's not seeming to be like upset with the thesis. D.A. Davidson is kind of just like, hey, we don't think this is a good business to invest in. JP Morgan seems to think that the data center delay should be a reason why you take the stock down, but that's not necessarily that bearish. CoreWeave right there down 11.2% on the day. Nvidia is getting hit. I kind of expected this. Nvidia added 300 billion in market cap yesterday with no catalyst. Like, it was a great day, but it was also like, well, does it deserve to have 300 billion? So down 2.56%, not that crazy. Nebius right here, down about 2%. If Nvidia is dumping, Nebius is going to dump as well. I mean, if CoreWeave's dumping, Nebius, I mean, if Iren, CoreWeave, Nebius, Nvidia are all dumping, that means the data center trades for today are definitely not on the side of the bulls. Granted, if you've been looking for an opportunity, that's where today might become more attractive, even if you want to sell puts. But all those names are red. Big Bear holding on to a 14% move, and then Palantir also getting it right here, down 1.4%. A Nike insider bought 1 million of stock. Really? Huh. Interesting. Honestly, the conspiracy theory here could be if the tariffs go away, you got a company like Nike that's really going to benefit from that. Now, granted, even if the Supreme Court strikes down the tariff case, I don't think the tariffs just go away. I think the Trump administration is working with their lawyers to make sure they can meaningfully make sure the tariffs stay in place. But yeah, you're right. One of the directors in the C-suite bought 16,000 shares at $62, disclosed yesterday. 62.09 is what he bought at. Nike right there, 62.24. There you go. That's green. SoFi, what do we got? SoFi, wow, below 30 again. This is the entire market. You can see the algos taking everything down today. CleanSpark down 7.5, Intel down 1, Beyond Meat down 9. Big Bear and Plug Power holding on to the green. A lot of other names are just going red. Molina's up a little bit. Robinhood down 2%. Robinhood almost hit 140 yesterday. That one's getting hit. DoorDash down another 2%. Celsius down another 2%. Elf got to 85 yesterday, right back to 78 as that goes down. S&P, though, is not. S&P's down $1. So you're not really seeing a significant level of pain. I know people hate hearing me say it's the algos, but like, give me another reason. Like, why did we go up 1.5% yesterday and now we're down 0.22% today? Like legitimately, and if you give me a broader macro reason, well, then how do you explain the 1.5% move yesterday? Because whatever macro reason you're going to give me, I'm sure in 24 hours, nothing has changed. This is why I hate using the word, it's probably algos, but like when there's no core headline to look at, I mean, there's nothing that happened in the past 24 hours, to my understanding, that could easily explain a 1.5% move to a 0.2% downturn. Other than just, hey, like the market has to consolidate a lot of those gains if you go up. The market added $1.8 trillion, $1.1 trillion of market cap yesterday. It's not probably going to go in a straight line up And so that's why I think some of the algos are taking it down today. Gravity, yes. I should be saying gravity more than algos. I need a better word than algos. Gravity is a way better word. Thank you, Midwest, for that. That's better. Can you explain what the algos actually... Algos are just algorithms by a lot of these market makers and hedge funds that are working in tandem, usually with each other, to show the market, to give the market either deals or opportunities, or to take things down or up. So from my understanding of how algorithms work, and again, I'm not an expert on this, I've never worked at a hedge fund, but at its core, there's a lot of sophisticated Jane Street, State Street, BlackRock traders that work together to consolidate different moves that they want to see happen in the market. And they're not necessarily doing it for their own benefit. They're doing it to be able to make better liquidity for their positions. And sometimes if they're over levered or underexposed, then they have to create different conditions. I mean, it is sort of the de facto explanation for why a stock would be up 10% after good earnings and then dump for no reason, and then it's up 10% the next week. It's like a lot of this stuff is controlled by forces that are bigger than us, and there's not really fundamental reasons to explain it. But at its core, that's also part of the market, and that's what creates these massive opportunities for people to get different dips. I mean, in April, when everything was getting hit, a lot of that was algorithmic selling at its core because you had a lot of de-risking from different funds, and that created some of the best opportunities we've seen. I mean, Grab got to $3.50. You know, Robin got to 29. Those become incredible, incredible opportunities at its core. Novo right there, 47.80. That's up 4%. CoreWeave still down 10%, so that's not getting any love. Some of these names are overbought. Yeah, I agree. I mean, you could definitely argue some of these names are overbought. D-Wave right there down about 3%. Then Chipotle down 1.6. We are going to be getting a lot more jobs data very soon. We have not officially gotten that jobs data. We're getting some hints of it as the government is getting reopened. One thing I saw today from the ADP private payrolls is that in October, you had private payrolls falling to 11,000 a week on an average over the past 4 weeks, which is obviously not good. 11,000 jobs a week is like not significant growth, which feeds the argument that the labor market has having some issues. The Fed probabilities now show a 67.4% chance for a rate cut in December. Again, I don't see a world where the rate cut doesn't happen, but time will tell, and we got about a month and a half to see if that takes place. Nvidia right there, 193, getting a little bit of a bounce off 192. S&P, again, barely down on the day, 680.29. Rocket Lab, are we getting back to 10%? Wow, Rocket Lab, quite the resilience, fell all the way down to 53, back to 56.40. Again, the quarter was phenomenal. That's up 9% on the day, 56.54. On the lab of rockets, Nebius still getting dumped. That's down about 4%. Again, based on those earnings, I have to go through the entire quarter. I don't know if there's anything they said meaningfully that would cause this type of move. But if Nvidia and CoreWeave and Iran are down, then Nebius, kind of trades with them. Nebius is going to go down as well. So I would say the entire sector is getting hit. Is Cypher also down? Cypher is down 5% as well. Yeah. I mean, look, if you're going to own these data center names over the long term, the best ones are going to outperform. But in the short term, they're probably going to move with each other. And if Nvidia is down 3%, it's going to be very hard for Nebius to be up 3%. Like, that's just not easy. Which is why, again, what I've been saying over the past couple of weeks is like, if I own Nvidia, or if anyone owns Nvidia, does it really matter if you need to own the neo clouds? And like, yes, there's a elevated alpha, but it works if Nvidia goes up. Like, Nvidia down 3%, there's no way in hell Nebius is going to be up 4% if Nvidia is down 3%. Or CoreWeave. Like, that's just like, no. If the thing that creates all the GPUs that goes into all the fancy data centers that Nebius, CoreWeave, Iran are creating is down and losing, doing the math, about $110 billion in market cap in 20 minutes, those derivative plays are probably going to get hit. Even Palantir, Nvidia goes down. Palantir has started to trade many times in tandem with Nvidia. Palantir right here, down about 0.5%. You could argue they work with each other. And Navitas right there, that's down 0.5% as well. TSM, where's TSM? TSM right there, 292. That's also down about 1.12%. CoreWeave CEO on CNBC. Okay, let's transition over to him. He can probably give us a better explanation about why the stock is getting hit. But let's take a listen to what he has to say.
Facility so they can monitor progress. So it's actually a great source of information. Look, it became apparent to us in Q3 that there were delays at the facility, at which point CoreWeave responded by deploying our own boots on the ground to ensure that everything was being done in order to move those facilities along as quickly as possible. We have teams of folks down there every single day working with the contractors, working with Core Scientific.
Down there meaning all the sites I mentioned.
That's correct. We have people on the sites, working at the sites with the teams there to ensure that the delivery, that everything possible is being done to ensure a timely delivery of the infrastructure.
So that kind of fits with some of the reaction today that to make sure this doesn't happen again, you'll have to assert more control over the engineering. Some analysts say vertically integrate further. Is that a reasonable assumption?
Yeah, so when you look at the way that we've been behaving over the past 9 months that we've been public, one of the things that we've done is we've built a portion of the organization that is self-built, right? And we'll never be completely self-built. We don't intend to be there, but we do intend to have the capacity within the organization, and we do have the capacity within the organization to go ahead and build these sites from the ground up. And the reason for that is because we need to be fully immersed in the supply chains that are so incredibly stressed across the globe because of this incredible build out that's going.
Okay, so the same explanation he kind of had on the earnings call last night. Ultimately, it's not, he's basically saying it's not really our fault. This is more to do with supply chain constraints, which, look, he could be right about that. It's just the street might not necessarily care about that excuse on a day like this. Nebius right here, 104, Nvidia 192, entire market's getting hit. Palantir down 1.3, SoFi back above 30. S&P now you're getting a bit more of a red candle, 679, losing 680. Grab is somehow green. I don't know how the hell it's holding green. That means this rumor about GoTo must really be exciting the street, because on a day like this, Grab would be closer to like 570 by now. So 608, that's up 2.9%. Rocket Lab losing its 10% move. Now we are seeing a little bit more of the aggression on the dump. Robin at 132, MicroStrategy down 1.7. Where's Bitcoin? Wow, Bitcoin lost 104. It was a 105 in the morning. All right, 103.9, not super low in the 103s, but it is down. Rivian had a great earnings. Wow, Rivian up another 3%. Dude, Rivian was 12 before earnings, now 17. Not a bad move. I know they're not profitable yet, but RJ did say that the tariffs are not going to be stopping the production of the R2 going into next year, or it wouldn't have a meaningful impact on their margins either. So 1695 on Rivian. That one continues to go green. Lilly 980, that's holding up. Let's look at the heat map. What is actually green today? Well, you actually have a decent amount of the market green. It's just not a substantial amount of green. So consumer defensives, healthcare, real estate, industrials are green. Tech is red. Semis are a mixed bag. Software is red. Technology is red. Consumer electronics, Apple's holding up. And then financials are basically flat to red with JP Morgan and Bank of America. But you got those names that are getting hit. Again, I really think today is actually relatively healthy. It's giving people some good opportunities. And again, yesterday was a great day, but yesterday was a lot. Nvidia 6% in a day. You just don't see that. You literally have not seen that in 5 months. So having that retrace and go down 3%, which means net 3% over the past 24 hours, I don't think that's horrible. I don't think that's crazy. Reddit is green, as a lot of these other names go red. Reddit right there, 204.83, S&P 679, and then SoFi trying to hold on to 30. It is going to take another couple weeks until we get Nvidia earnings, which is going to be another massive catalyst for the broader market. And, you might have a lot of hiccups until we get that catalyst. So that's also really important to understand. But we're not at the lows of October, and we're not at the lows of where we were on Friday. And I think a lot of that was reversed because of the shutdown. So as long as we're not, heading back to that 660, 655 territory, I think most portfolios can withstand that. And hopefully that gives us a leg up for tomorrow, or for the end of the month. Chad says red or green, that easy. Chad, I don't know what to tell you, bro. My job is a bit more complicated than yours. Like, you're out here building software to change enterprises. I have to analyze if things are going to go red or green. Okay. So I know that you have your little fancy AIP architect job and you talk with all these executives, but I have to analyze if things are going to go up or down. And quite frankly, I would say it's a bit harder than what you do, man. Just saying. It's a little bit harder, And if I don't know the answer, the only thing I can say is algos. And then everyone gets mad at me. So the level of public scrutiny I have to face every day when I don't have an answer for why we're red or green, and I say it's algos. I don't know if you're dealing with the same thing. Just don't know if you're dealing with the same thing. Shout out to Chad, by the way. Yesterday was his birthday. He was surprised that you guys knew it was, dude, I love Chad, but I did not know it was his birthday. So the fact that you guys knew it was his birthday, like I found out from the chat, he was just like, I don't know how your chat knew it was my birthday, but you guys are awesome for knowing his birthday. And also speaking of Chad, here was our boy Tom Lee yesterday defending Palantir's valuation when asked about it.
No, but I don't think when they talk about the valuation of AI stocks, they're necessarily talking about Nvidia. I think you would agree with me on that. They're more so talking about names like Palantir and some others where you could easily say, yes, their earnings have been great and the story is incredible, but at some point you're only willing to pay X for a stock, and maybe that one's gotten a little bit too rich. Using that as an example of the kind of names they're talking about.
Yeah, I mean, I think Palantir is an example of what they call like an N=1 company. You've got a founder-led business developing products that really seem like magic for the companies that adopt it. So, should this just be getting a softer multiple? I don't think so. And Palantir's opening up so many markets, and if it was a venture capital firm, they'd be getting, potential carry for how they transform businesses. So to me, I think that this is still a market discovering how to define the valuation model for Palantir. But to me, that doesn't mean it's a bubble. People would have said that about Tesla in 2018 because it looked incredibly expensive, and the stock in Tesla has been a huge performer since then.
I think it's a fair point by Tom. It's something he's been pretty consistent on for a long time. When I did my podcast with him in July, he said the same thing about Tesla. When you have some of these names that can't be fully understood through traditional valuation metrics, and I don't think it's a cop-out either when he says that they can't be understood. I mean, Palantir, the guys on Palantir Weekly, myself, Amir, Arnie, Matt, every single quarter we have been blown away by how Palantir has exceeded our expectations. And if we're blown away and we understand the company, I think, better than a lot of the institutional analysts, I can only imagine the guys that don't spend years or haven't spent years understanding the company, they definitely did not expect 63% revenue growth with 51% adjusted operating margin. So as a business scales using PE or price of sales, although Palantir has an aggressive one to make sense of it, especially when you actually talk to the customers. And, I've got in a front row to really talk to a lot of these customers. And, one of them said it's like looking into the matrix. When you hear that type of stuff, and when you have Tom Lee, who's talked to customers, say it feels like magic, it's just hard to say multiples are the only way to define that name. It's not saying that it's not important to talk about multiples and quantitative metrics, but it's not the only part of the story. And quite frankly, if you focus on that with Tesla in 2018, you would have missed Tesla as well. So I think it's a fair point. Tesla right there, 438. That's down about 1.4%. BM&R getting a move right here. That goes green on the day. Is that because ETH is moving? ETH is indeed moving. If ETH is moving, is the S&P moving? The S&P is moving, folks. Wow. We are 70 cents away from going green on the day. That would be a nice reversal about 30 minutes after the market open. Nvidia giving a little V-shape. Nebius right back to 108, fell to 104. SoFi just went green, 30.61. Iran trying to go green. I think the algos are on our side. The algos were mean to us at 9:45, and they're nice to us at 9:58. There you go. See, this is my point. This is why I keep saying algos. How does anyone explain at 9:45 Nebius was 104, and now at 9:58 Nebius is at 108? What happened in these 15 minutes? Nothing. There's obviously nothing fundamental has happened. There's no tweet. There's no macro news. The only thing you can chop it up to is the market decided to move higher because unilaterally, if you look at every single stock making a V-shape right here, you had algorithms come in. And trading within those algorithms is just something that, or at least buying the dip on certain on moves that are potentially algorithm induced, that has been very fruitful to most investors throughout the year. It's FOMO. All right, it can't be FOMO across the entire market though. FOMO could happen in an individual name. I'd understand if Nebius was at 115 or something and it just exploded because everyone just, FOMO'd in. But Nebius is right back to where it was 10 minutes ago after going down $4. That's not FOMO. That's just computers, I feel like, setting these stocks up or down. We will have Technical Tuesday today. Let me confirm with Jason. But yes, we should be having TT today. We have no earnings outside of Oklo, so we should be able to look at a lot of these stocks and their technicals. Palantir right there, 191.7. Nvidia, 193. Cypher down about 2.75%. This chart this morning I thought was also really important. U.S. households now have 52% of their financial assets allocated to equities. This was part of the reason why asset holders have done well over the past couple of years. Assets have gone up. If you own assets, you're doing well. If you don't own assets, it's not been the best. And so you do have the United States starting to benefit from a lot of these stock market returns. This was Trump yesterday giving a little bit more clarity on the $2,000 dividend that he talked about yesterday as well.
We're going to issue a dividend to our middle income people and lower income people of about $2,000. And we're going to use the remaining tariffs to lower our debt. We're going to be lowering our debt, which is a national security thing. So we're doing a lot of good work. And the numbers were reported so incorrectly. The real numbers are trillions of dollars have been taken in or gotten in terms of investment from the tariffs. And so if that were ever reversed, it would be a disaster. Frankly, it would be a national security problem for our country. And nobody thinks it's going to be reversed. I think we had a very good court case. As you know, it's before the Supreme Court right now. But if that were ever reversed, people are saying, oh, it's $1 billion. Some people said, oh, it's $2 billion. Well, that obviously we can handle very easily. But this is trillions of dollars we're talking about in terms of the tariff income and all the investment income that's come into our country. We're going to issue a dividend to our middle.
Now, when he says we're going to issue a dividend, again, I don't know if that really means stimmy checks. But listen to what he said. We're going to issue a dividend. Besant was talking about, the no tax on tips, no tax on overtime. That implies that there's going to be a $2,000 dividend given to low-income Americans. Then Trump says we are going to issue a dividend. I mean, that screams stimmy checks. But then again, it's unfathomable that he's actually going to give out stimmy checks. Like, I don't even think he has the full power to do that without Congress. So I'm not sure exactly what the argument is or how it's going to be implemented, but obviously Trump is going to get people, or trying to get people on the side of the tariffs if the Supreme Court were to strike it down. And I don't know what implications that would have on the market. I mean, ultimately, if we gave a $2,000 stimmy check, I think the markets would like it, but obviously there would be some concerns about inflation. Nvidia right there, 193.43, and then Palantir, 191.93. I do agree, though, on this perspective that Trump's been saying that if you do have the tariffs reverse, it would be a disaster for the country, just from the perception of the deals that might not be in place if the tariff was the linchpin for why the deal was created in the first place. What if Europe says, hey, we don't need to buy $750 billion of natural gas from you guys anymore because the only reason we did it is because we're threatening 50% tariffs. If that's not on the table, I mean, just logically, other countries would probably pull back. So it is going to be very interesting to see what the Supreme Court says. I think we're going to get the answer towards the end of the month. But it's one thing that definitely could be something we have to watch out for in the market. Now, granted, the market might like it because there's no tariffs, and the market never liked tariffs in the first place. So, I mean, who knows how the market's going to react to it. But overall, it's definitely going to be something that we're going to have to keep up with as we get towards the end of the year. CoreWeave right here, still down 11%, getting a little bit of a bounce off 92.40, but not much of a bounce as that one continues to fall about 11%. SoFi, again, the news from Noto this morning was that crypto is coming to SoFi. Put in the chat if you would buy crypto on SoFi. I'm curious if there's anyone here that actively uses SoFi that would also like to buy their crypto on SoFi. I think the biggest issue, again, is just like the spread and if people want to use crypto or SoFi as their core trading platform. But I'm sure there's a lot of people that would be okay with DCAing $100 Bitcoin every month, and they would do it on the platform that has all their assets in the first place. So it's not crazy to imagine that would happen. It's kind of 50-50. See a decent amount of yeses, decent amount of nos. Obviously, Robinhood is cheaper and the Robinhood UX experience is a bit better. But nonetheless, if you're a power user of SoFi and they offer crypto, it's not bearish. It is only accretive. I don't think it's taking anything away from the platform. So it makes sense for them to get into crypto. And look, SoFi has been able to grow without transaction volumes. If they can increase transaction volumes even 10 or 20% per year, that should be something that helps their operating leverage at scale. One of the reasons Robinhood has such good operating leverage is because of the margins on crypto. So that should only be better for SoFi than not. Rocket Lab right there, 5609, still holding 8%. And then Nike, insider buy of $1 million. That's at 3.2%. Again, Open Door, Kaz tweeted his family's buying $1 million worth of stock this morning. was talking to Tanner about this yesterday and Roy, and yeah, we were all three weirded the hell out from this tweet. I mean, I don't know as a CEO if you can publicly say, I mean, you can do it. It's just weird that your family's going to buy $1 million worth of stock. Like, first of all, why would you give the number? And then second of all, why are you announcing to everyone you're going to, like, it's fine for, like, it. Usually when a CEO buys stock, the Form 4 comes out and then everyone sees it. They don't, like, it's just, it was weird. Is that, like, if Vlad came out yesterday and said, hey, my grandmother is going to buy Robinhood stock tomorrow, I'd be like, what? Like, what? Like, I don't know. That is weird. He did the same with the other company a year ago. He did the same with Shopify, but that was internally in their Slack. And also, he wasn't the CEO of Shopify. Like, he's the CEO of Opendoor. It just feels like he's trying to pump it, dude. That's what it feels like. And, like, as a CEO, you shouldn't be trying to pump it. You should be working your hardest to increase the value. But so explicitly saying, hey, I'm going to buy the stock, it's like, it's just weird. So I don't know. But nonetheless, Opendoor holding on to this $8 price. And I still am not fully convinced what the new mission is going to be for the company. I listened to a bit of the earnings call. At the end of the day, they have to buy low, sell high. I don't know exactly how that's changed. Maybe tokenization plays a role, but then they become a brokerage. And like, so there's a lot of different caveats to this. I do think Kaz is legit. It's just that tweet yesterday made me really weirded out. But then you got to give them a year. And over the course of the year, if they can get those margins up and rates come down, that could be bullish for Opendoor. Nebius back to 105. Again, why does it go from 104 to 108 back to 105? I feel like this is a lot to do with just the broader market consolidating today. Nvidia back to 192. S&P back below 680. Very choppy within the first 30 minutes of trading. Grab somehow holding green, and then Palantir holding 190. Big pop on VIX. Where is the VIX? We didn't even look at this morning. VIX. Yeah, VIX from low 17s to high 17s. It's not up a lot today, but you do have a bit of a pop, up almost 0.5%. Palantir just below 190 right there. And so you're seeing a lot of these names get affected by that. 679.34 on the S&P. Falling Knife, appreciate you, man. Appreciate you. Best morning show in the world. Bitfarm, decent price entry. Thank you for being here, sir, and thank you for the super chat. Bitfarms is an interesting one. This one got to 660 a couple weeks ago. Now it's at, what, 348? Yeah, I have not looked deep into what they're doing with AI data centers, but I know they did make the pivot. I know they also diluted by, I think, 500 million, or maybe it was 350 million. So a lot of these companies are raising money, getting that process over with, and then they're getting to the execution phase of actually building out these data centers. But Bitfarm's right there, 347, down 3% on the day. Ernest, thank you for the super chat as well. Just want to say thank you for all you do, Amit. You're all the best. Thank you, Ernest, for being here. Appreciate you being part of the chat. And Sony says, Amit, at what point does Iran become juicy enough to buy? So I have not looked enough at Iran's financials, definitely not like Nebius's financials, to make that proclamation. The Uber bulls would say, hey, you know, under 60 is a steal. I think your more conservative bulls would say around 45 is when you want to get interested. Did touch 80 the other day, so maybe 80 to 57 is your dip. But I'm not exactly sure. I do know that Nebius getting multiple deals. Iran's probably on track to get another deal after this Microsoft stuff. That is net bullish. The question is the ROIC and unit economics of these deals. And for Nebius, they seem to be relatively decent. For Iran, I got to do my research and see, you know, how strong these deals are. But look, both stocks have done very well. I mean, Iran was at freaking $6 earlier this year. Nebius was at 20. So can't complain if you buy them here like I have and they go down 10, 15%, you just can't complain because you understand you're buying them after a massive move. APLD, are you getting a dump right there? Applied Digital, that's down 8%. Yeah, this is all the data center plays. People are selling data centers and going into Opendoor today. That's what it feels like. So pretty much every data center play getting hit. CoreWeave, the worst of it, down 12.7%. Goldman Sachs U.S. non-farm payroll employment declined by roughly 50,000 in October, the biggest decrease since 2020. I think I saw that headline this morning. Let me pull that up. Goldman's trying to do their own macro data until we get the labor market coming in. By the way, Stephanie Guild, who's Robinhood's like macro economist and manages the strategies that they have, She commented under my post yesterday about the sort of bifurcated economy. Again, I'm working on this Substack piece on the sort of dual economy that we're living in right now, at least in the United States. And she said, based on her research, a lot of the layoffs are Doge related and government related. It's not really private related. So she said, through combing through the Challenger layoff data still led me to believe that most of the labor softness is still from Doge and the shutdown and businesses that locally benefited from the area. DC has the biggest layoff as a percentage of population, followed by Georgia, where the CDC was located. So her argument is that you can't fully say it's private payroll related or AI related yet. The Challenger layoff data that said we had the worst jobs report in October since 2003, that could be more shutdown Doge related. Which, if that's the case, it's actually bullish because you could see a spike up in the coming months. But that is one thing that I do think that we have to focus on. But you got CoreWeave right here, still getting hit. Jumpman says, I'm in DC and Doge is hitting us hard. Yeah, we don't talk about Doge that much anymore, but I would imagine the effects of Doge and the voluntary buyouts that Trump offered to people. I mean, you're going to start to see more implications of that, as a decent chunk of people took that buyout, and then, a decent chunk of people have been laid off. So that could definitely be impacting the shutdown. I mean, one could argue, and I don't even think this is putting on a tinfoil hat here, but one of the reasons 2023 and 2024 was so good, not even in the stock market, but just like overall economy, job numbers, etc., was because the government was employing a lot of people and was spending a lot of money. And I know the government always spends money, but if you look at the 2024 economics in terms of the actual budget report from the US government, we spent a lot. Like, we spent a lot. And obviously we had a lot more immigration, so there were a lot more jobs. Now we're doing the opposite. We are not spending as much. We're still spending a crap ton of money, but it's not as much as it was in 24. And we have a lot more deportation. So those two things put together could obviously lead to some level of contraction in the overall labor market and GDP, which is why AI is kind of the only hope, I think, for us to grow out of this deficit. And Elon said the same thing yesterday, which is that the ability to grow out of a rising debt profile for the United States and, $5-6 trillion deficit, it's going to have to come from AI and autonomy and robotics and all these other things that are going to massively increase margins. Elon said, seems to be the only way to deal with $38 trillion in debt. So, one could argue that, although Trump is having these massive layoffs and, the government shutdown is obviously affecting the labor market, we've got to have efficiency in AI to make sure this does not become a wide-ranging issue long-term. Market pulls back again. Algos, I mean, someone give me a better reason. I'm here to provide as much commentary as I can about what I'm seeing. I don't see a crazy headline this morning for why Nebius goes back to 105 or why BM&R goes red after going green. I mean, obviously Ethereum just went red, but the intraday swings seem to be more algo related than not. Now, one thing I will say, more fundamental reason, it is Veterans Day. And so you might not be having that much volume coming into the markets today just because the bond markets are closed. So that could also be leading to some wonky price action as well. HIMS just went below 40. And Meta still going red as well on the day. App down 6.5%. Goodness, App is getting hit. 607. That was at 640 yesterday. What about the Amazon and UPS layoffs? Yeah, I'm not denying that the private sector is having layoffs. I mean, I think we've done a pretty good job covering it on the show over the past couple of weeks. 100%. And those are obviously not Doge related. I'm just saying, based on what Stephanie's looking at from the data, CoreWeave now below 92, a majority of that 175,000 in October, which I don't even know if the Amazon and UPS stuff was fully factored for October, if it's going to be counted in November, that had to do more with the shutdown and government layoffs. Having said that, obviously, if there's deeper cracks in the labor market from companies like Amazon and UPS, and if that continues to extend, we had American Airlines last week announce corporate layoffs. That's not a good thing. And I don't know how to resolve it. I don't do you go short the market if you think the labor market is cracking? Or do you stay long the market because all these companies that are laying off workers like an Amazon are going to have better margins? I kind of think it's the latter over the former. Now, obviously, if the layoffs get so intense to the point where people aren't buying things from Amazon anymore because they don't have the money to spend on a new water bottle and that affects Amazon's earnings, then that's fair. But what if Amazon's margin efficiency is so much better than the lack of demand they're getting from the labor market deteriorating that it doesn't matter? I don't think there's amazing answers to these questions. I do think if you bought Nvidia at 110, you're not selling it at 190 just because you're afraid of the labor market. Like, that seems a bit short-sighted. I think having a hedge obviously is not the worst idea, right? Buying some puts on your position just in case, but I don't know if that means you get the hell out of the market, especially if this AI CapEx trade might not even be contingent on the labor market. The way it's affected for if the labor market affects earnings so dramatically for a Meta, Google, and Amazon, then I think you will see them pull back the spend. Now, granted, I'm even skeptical if they would actually pull back the spend, because this is the once in a lifetime opportunity. And all of them have said that we have to keep spending because, this is the next big S curve that we have to chase. Now, granted, if their stocks get cut in half and, the earnings are down 30%, then maybe they do stop the spend. But can we easily say the labor market would stop them from spending on CapEx? I don't know. I think we need to have a lot more data to see if that would take place. Layoffs could lead to a recession. They could. And look, a recession is inevitable. The question is it just going to be a technical recession of 2 quarters of negative GDP growth, but not actually a meaningful recession that, really hurts the broader economy, like what we saw in 2022, or is it something much worse? And that I don't think everyone has the best answer to. Nebius right here is still getting hit, down at 103. Nvidia 193. That one's at least holding above 193. Zeta, I'm talking with Ronnie tomorrow on Twitter Spaces about Zeta, so we'll do a little bit more of a deep dive on that. I am starting to warm up to Zeta's financials. It looks cheap. I'll just say that. I haven't fully done my due diligence, but it definitely looks cheap. Zeta right there, 2016. That's up 1.3%. VG, that's down 3%. And then Archer, that's down 1.78% on the day. Yes, AMD will be talking at 1 p.m. Why did SoftBank sell Nvidia? They said this morning that their main reason was to invest in other AI plays. I can't blame them. There's no reason to hold on to Nvidia if you think it's just going to double in the next 5 years at the scale of SoftBank's size. I mean, there's lots of other opportunities that could compound their capital. So I don't think it was necessarily a bearish sell. Also, again, logically put the pieces together. If you sell the epicenter of AI to buy another AI name, if they were bearish Nvidia, why the hell would they buy OpenAI or ARM or Marvell, right? It goes back to Nvidia. You cannot invest in data centers or data center adjacents or foundation model companies if you think Nvidia has topped. It's very hard for them to believe those other companies are going to do well if Nvidia doesn't. And I know there's an argument you can say for why, maybe the GPU build out is over, and therefore, yeah, I get it, but given the demand we've seen from Nvidia, given the earnings projections, it's hard to imagine that's kind of like the core thesis one can come up with. Nvidia right here, 8.5% of the S&P 500. Again, that one continuing to be a majority of the market, and that's why when Nvidia goes down, you got the rest of the market that goes down as well. It will be crazy if Nvidia gets 15 trillion in the next decade, and SoftBank, if they had held on, would have done way better than piling into OpenAI. I feel like that's the bigger risk. What if OpenAI doesn't become a multi-trillion-dollar company and it's stuck at 500 billion, right? And then Nvidia was the one to kind of take the bet on. But at the size of their portfolio, it's not crazy to imagine that would be happening. Oracle, this one is down. Wow, 232. All right, so Oracle officially back to where it was in September after their RPO guidance. Oracle, I think, deserves to come back down to reality. A lot of their financing is through debt, and 232 to 350 in less than 24 hours made absolutely no sense. The RPO growth was great, and the street was excited about it, but I mean, that was kind of stupid, seeing that level of a move. So not crazy to see Oracle coming back to reality. Again, they've filed for $38 billion in debt. Got a lot of people wondering kind of why exactly they're dealing with the debt profile. I mean, it's to a point where, and I don't know if I have the numbers exactly correct, but Oracle's not really going to have free cash flow over the next few years based on all the debt that they're piling on, which, again, investors are okay with because there's this magical ROI at the end of the rainbow. But it is one of the largest pseudo hyperscalers that is taking on the most amount of debt. And that's why I think that stock is getting hit. CW says I sold at 300. Yeah, I mean, if you sold anywhere in those 300s, was not the worst sell. If I had Oracle that day, I probably would have sold. Obviously, everything's easier in hindsight. But even when I remember I went live from Vegas on the market open, and I was looking at that price, and I was like, this is stupid, bro. It had a $300 billion in less than 20. It's not Nvidia. And it wasn't even revenue growth. It was contracted revenue growth. It was RPO growth, which might not ever happen. They might not ever qualify for those performance obligations. So it definitely did feel weird. But I think it's healthy that it's back down to where it was. Nvidia right there, 192. CoreWeave continuing the dump, down 14%. And that one getting hit on the day. Puts for airlines in Q4. So the air traffic control workers are not yet coming back to work. Trump did say that they do have to come back to work. There was a clip yesterday about Trump being asked about them. And here is what he said about the air traffic control workers.
Post earlier today where you blasted the air traffic controllers who had not shown up for work and offered potentially a bonus of $10,000 for those who have worked despite the shutdown. Are you worried that given the fact that we have a deficit of air traffic controllers still, I know we're trying to change that, that might be a difficult
No, we don't have much of a deficit, and we have a lot of people want the job. But I was not happy when I saw all these people, oh, we have to, look, life is not so easy for anybody. Our country's never done better. We should not have had people leaving their jobs. And what I basically did is say the ones that stayed, of which there were a lot of them, I'm sending them a $10,000 bonus.
Where's that money coming from?
I don't know. I'll get it from someplace. I always get the money from someplace regardless. It doesn't matter. I do a lot of bonuses for people because it's really something that, it's like the American way when you think about it. So here's somebody that goes and shows up every single day. Some of them showed up early because they knew there was going to be a problem. Those people should be rewarded. Others, we can't make it. We can't. You know, a lot of the people that showed up also had a second job. They took a second job temporarily, but they all know the money's coming, and the money was coming. So I want to reward the people that showed up without a lot of nonsense, without a lot of talk. They did their job, and in many cases, they worked longer hours to get us through this period.
When can we?
So, I mean, look, you got Trump trying to make the argument that these air traffic control workers should come back to work. Obviously, he is upset that a lot of flights have been delayed. Flights have continued to be delayed. I think it was about 10,000 yesterday, and then about 11,000 over the weekend. So until the government officially reopens, we're still going to have some of these issues, and ultimately, we're going to see if these people can get back to work. Here's some updates on CoreWeave right here, as that stock is down 13% on the day.
Essentially, that's data center buildings with power connected, but interiors that are unfinished. So just exactly what it sounds like, a shell. And this is pushing forth some fourth quarter revenue into next year of Q1. The company also cutting its Q4 CapEx guidance nearly in half, though that spending is also just shifting into Q1. CoreWeave wouldn't name the data center provider causing the delays, but analysts widely suspect it's Core Scientific. Some on the street are also connecting the dots, wondering if this is why Microsoft started diversifying to other neoclouds like Nebius, why Azure recently missed expectations, and why a Microsoft CEO is now blaming shells as a constraint instead of GPUs. The bulls say look past the near-term noise for CoreWeave. Wedbush points to CoreWeave's backlog nearly doubling to $55.6 billion, and CapEx expected to jump over 100% next year as signs of demand just remain incredibly strong. But JP Morgan downgraded the stock to neutral this morning, saying supply chain pressures make forecasting just too difficult at this point. And as one other analyst put it, CoreWeave trades on vibes. Yeah, he did write vibes. And cutting guidance, no matter the reason, translates to the stock being down. So that's exactly what we're seeing play out this morning, guys. And then I just want to point out separately, AMD's Analyst Day is here at the NASDAQ up on the 10th floor. The stock is down, 1.5% right now, but still outpacing Nvidia and SMH. Expect comments from Lisa Su on the update to the total addressable market for AI and AMD. We could see that hit 1 trillion, and more comments on their AI GPU rack rollouts. Guys?
Vibes. Okay. maybe that's what CoreWeave does trade. By the way, did she say nebulous? I think she said Nebius. American Airlines, 1309. That's down 1.65. Where is Nebius? 104. UAL is at 95. Then Delta is at 58. All right, so it looks like we got a relatively red day. It's not as ugly as it was on Friday. S&P down 0.3, but everything else pretty much down 2 to 3%. Grab is holding on for its life, up 2%. It definitely looks like it wants to go red, but holding on to some of the green. And then Rocket Lab, pretty impressive Rocket Lab as well, holding 5% here. eToro's up 8%. They had a pretty good earnings. eToro had a good earnings. Crypto brought them a lot more revenue as well. I have not really done a deep dive on eToro. Again, in the brokerage space, it's just hard when you compare them to a company like Robinhood, but it is worth only $3 billion. Same thing with Webull. So it is worth looking into if we are continuing to be in a bull market. It's just whenever I think of like the bull market as the catalyst for the brokerages, I think of, okay, two things. Number one, what if the bull market is not as aggressive next year? That means all the brokerages are going to take a little bit of a haircut, maybe even more than a little bit, right? Could be aggressive haircut. Number two is like when they take a haircut, what company is innovating when things aren't going the best in terms of bull market momentum? I don't know if it's eToro or Webull, but I know for a fact it's going to be Hood. So that's what keeps me probably more allocated to Hood than a lot of these other brokerages. We got eToro right there, up 8% on the day. Why should Grab go red? Wasn't it undervalued after the earnings? I'm not saying it should go red. I'm just saying on a day where Nvidia is down 3%, it's inevitable that pretty much every stock is going to get hit. And that's what you're seeing right now. And, Grab probably goes down if Nvidia is losing $200 billion in market cap. BitMine right there. That one goes red again, down 1.5. SoFi holding 30, which is nice to see. SoFi would be like 28 by now. The fact that it's holding 30 is nice. I actually don't know why Rivian's up. Did they get upgraded today? Rivian making a really big move. They had earnings last week and they made a move. Feels like there might have been an upgrade to get this one going green. No, I don't see any upgrade. I don't see any headline. Maybe that one's more technical. It is weird, though, that one going green as the broader market goes red. Admit you're being biased towards Hood. They literally copy-paste eToro social trading. That's not innovating. Well, first of all, I'm not saying the social network from Hood was innovative. I don't think I've ever made that claim. But I think like the ability for Hood to enter into new verticals and markets, even when things aren't going good, that's when it requires really, really strong technical engineering and talent and a leader who's setting the culture. I don't know if eToro has that type of culture or mission or ability to expand to multiple. I mean, again, Robinhood has 11 different lines of businesses doing $100 million of revenue. That's not the case for the other brokerages. So also, does anyone even use eToro's social network? Like the difference between Hood and eToro is that when Hood launches it, I don't know if it's going to be a success, but I think a lot more people will be using it than because Hood has 30 million users, right? So I don't know if it's going to be the best. And look, I'm not the most bullish on social networks on finance platforms, so I have no idea how it's going to work out. But I think they're going to get a lot more distribution than eToro or like StockTwits. And that's why that could be an additional catalyst for them. Iran down 6, APLD down 10, CoreWeave down 14. Lots of people use Webull social network, do they? It's like Webull, SoFi has a social network, Public has a like. I've never been net bullish on those types of products. I don't think people want to post every single trade they make and stuff like that. I think if anyone's going to figure it out, it's going to be Hood, and that it's going to be a big challenge for them. But I think they have a shot. I just don't think eToro is necessarily accelerating in that arena. It's more like message boards, yeah. But when I talked to the Hood people, they said you're not going to be able to like post news. You can only post your trades. CoreWeave down 14%. And that to me is kind of confusing because like, I know it's like signal from noise and stuff and people want to see trades, but a lot of times people go on social networks to like catch up with what's going on in the world. And if you don't really allow people to share that stuff, I don't know how sticky that product becomes. So we're going to have to see when they launch it next year and see how it plays out. Robinhood right there down 2.7, SoFi still 30, and then Tesla 435. Shout out to Farzad. He's going to be a Hood user as well in probably a couple weeks, but maybe even a couple days. He's moving all this Tesla to Robinhood. So you've got 50 million shares of juicy Tesla stock coming over to Robinhood, which I'm very, very excited about. And, he's been a lot more of a fan of the entire Robinhood ecosystem. So thank you, Farzad, for bringing over your 50 million shares. We appreciate it. And hopefully that continues to help Hood. Apple right there, 273. All right, so Apple going green in the face of this red. Everything else that's kind of high beta getting sold off and people are piling in to Apple, which is kind of weird because, again, like you talk about these consumer issues. I know Apple and the iPhone sales are going well, but do you really bet on the consumer via Apple if we have some issues? I mean, how many people are going to really be buying new laptops and iPads? But then again, Apple did guide for 12% revenue growth in Q4. And if Apple is confident on that guide, obviously that could be very bullish for Apple. Yes, he has 50 million shares. That is correct. Oh, sorry. It's 500 million. Sorry. He corrected me in the chat. 500 million. It's a decent amount of shares for Mr. Farzad. So, yeah, 22 billion in Tesla. Correct. Oh my gosh. He obviously does not have 50 million shares, guys. I'm joking here. He has 500 million, as he claimed. No, I'm just joking. Now, I don't know how many shares he has, but people forget Farzad was a Tesla employee. He worked at Tesla back in like 2018. So he's been following the story for a very long time. I think he's pretty much all in Tesla. So it is cool that he's bringing that over to Robinhood. American Airlines right there, that's down 1.6. Oracle down 4, 230.5. And then Nvidia down 3.2. All right. What other headlines do we have? What other macro data do we have? Let me see. Option flow, Google, someone just sold 3 million worth of puts on Google at 285. That means they're bullish. That's expiring January 26. Apple, someone just bought $1 million worth of calls for December 275. So you got some call buyers coming into Apple and put sellers coming into Google. Where's gold today? Gold was up yesterday, almost 2%. Gold is down, barely down, but it is down. Still holding 4,100. Fell all the way to 3,900 2 weeks ago. Gold is down. Silver's up a little bit. Silver back up to the $50 range as well. By the way, Elon officially got his shares yesterday, or he got the grant to get his shares, which is very nice to see. And quite frankly, I'm not going to lie, dude. It's making me want to buy more Tesla going into 2026. And I understand the valuation is aggressive on Tesla. I understand the multiple is hard. I understand that they're not growing as much. But, dude, I kind of just think he's motivated. Like, he gets to go to work now every day knowing that if he works his ass off, he's going to be worth $1 trillion. And he's only going to get there if the company does $400 billion in adjusted EBITDA, they sell 20 million cars, and that he takes the market cap to $8.5 trillion. And quite frankly, I am very surprised the stock has been trading above 400. Like, the fact that it's been holding these levels and it's not been dumping even after the crappy earnings, to me, is a real sign of confidence by the street, which has been upgrading the stock well into the 500s, and also by the broader market thinking that Elon's now ready to get paid. And yes, it's going to go up, it's going to go down, but I don't know if you get that 350 level or that 335 level when I bought in a couple months ago again. Now, obviously it could happen if, the market tanks, but I do think the raw compensation package in and of itself is a reason to be bullish. Now, again, the sort of hedge to that argument is that if 2026 we get more bearish, you get a 10% correction on the S&P, obviously all these stocks are going to take a dip. But withstanding that, I do think that him being more bullish, or him being compensated, is a lot more bullish for the trajectory of Tesla. Nubank right there, 1630, that's up 1.72. United Health goes green. Oscar still going green. A little bit of safety on a day like this. And then Eli Lilly, that is up 2%. Shouldn't he prove first that he can increase revenues again? Well, I think he's heavily incentivized to prove that he can increase revenues. I mean, look, this is the thing with growth stocks, right? You have to buy before you see massive, massive levels of growth. And when you see those massive levels of growth, oftentimes it's not that it's too late. It's just that you're buying at a higher price, right? Because a lot of that was already front run. And I think that's potentially what's going on with Tesla. So we're going to have to see if it's a question of can he increase growth again. I do think by the end of 2026 that will happen for Tessie, which means then the question is, can it just sustain the multiple that it's trading at since then or till then? But, 2018, $50 billion stock, people didn't think he'd get it to $500 billion, and he did, and maybe the same story happens again. eToro up 8%, Rivian up 6%, Google down half. And then Elon with Tesla down about 3.4. Yes, I did buy Nebius today. Amit, do you think FSD could work in New Jersey? Dude, I use FSD. I don't drive my car that much anymore, but I drive it kind of like once or twice a week. And when I go on a drive, it's phenomenal. Like, yes, absolutely it can work in New Jersey. I mean, it's been working for the past couple months for me. And it's amazing. That's the other thing, I mean, the bullishness I have towards FSD, I don't know how the business model turns out over the next decade, but I mean, the product alone makes me want to buy more Teslas. It's just becoming really good. And it's hard to imagine fading that. As like, when people talk about what's the use case of AI, well, self-driving should be one of the big ones. And that should create meaningful value over the long term. Duolingo right here down 3%. AppLovin down $48. My goodness. Down 7% on the day. I feel like there's something specific on AppLovin that's creating this pain. But it is red. It is indeed red. Let me go to the stock draft right here and see how we're playing things out. So Matt's up 28. I'm up 35. So still in first place, even with Duolingo down 60. Steve's up 5. Tanner's up 19. And then Chris is up 4. Again, Chris having Axon and Elf. That kind of hurt. Matt's up 28, and then I'm up 35. Tanner was telling me about Axon yesterday. I thought they were just body cameras. Apparently, they're a much more integrated cloud service provider with software outside of just body providers. And so, I mean, there is a thesis on Axon. The problem is, and this is what he said as well, it's expensive. 180 times earnings. And so when I think of a company like Axon, I'm like, well, wait a second. Tesla's also trading at like 200 times earnings. So like, would you buy Tesla? Would you buy Axon? I kind of feel like Tesla has more potential. But the video he showed me yesterday was pretty damn cool. I mean, I did not know they were doing as much as they're doing in terms of integrating the ability to manage and understand when a robbery happens, when a crime happens. They're now extending to workers and warehouses. I mean, there's a lot of interesting stuff they're working on. It's just an expensive name. But he got it at 564, so looks like he kind of got the bottom on this name as per that earnings dump. Tesla right there, still down 2%. Then Apple, kind of your safety on a day like this. Yeah, shout out to Star Buccaneers. They were talking about Axon in the chat for the past year. Massive moat. That's what I got away from that. I mean, the reason I think it's trading at almost 200 times earnings, similar to Tesla, is because there's a really big moat. And it's hard to find another company that would actually be able to replicate what Axon has built from a hardware and software perspective, and actually be able to sell that to the level of agencies. I mean, they're expanding to Europe now. Like, it's not just a domestic police institution in the United States as their core client. Seems like this is going to be expanding across the entire world. Nebius back to 105. It's just an expensive name. And that's probably why they got hit on earnings. CoreWeave fell below 89. It's now back above 90. Street really is upset with those earnings. That stock right here, down 14% on the day. Amazon says Prime Video now reaches about 350 million monthly ad-supported viewers, up from 200 million last year. Wow. This is interesting. They're disclosing this. And Netflix, they stopped disclosing subscribers. The other day, Netflix came out and they disclosed how many monthly active users they have that are watching Netflix via ads, like that are on an ad-supported plan. I think it's about 190 million. So they probably wanted to tell the street, hey, like, I know we don't give subscriber numbers, but we definitely do have massive distribution on these eyeballs for advertising. Amazon right here, 315 million. We don't talk enough about Prime Video, but it is another part of Amazon that is very, very exciting. And over the next 10 years, that's only going to get larger and larger as it scales. VIX continuing to spike a little bit. CoreWeave still down. Palantir, are we losing 188? Palantir 187. We lost 188, so that's down 2%. Let's get an update from this jobs tracker on ADP. This is also potentially one of the reasons why the market's going a little bit red as we got some of this new data this morning.
Average of private sector job creation in the ADP preliminary report down 11,000 on average over the 4 weeks. So that would equate to a month-on-month change of minus almost 45,000. And just to explain, first of all, in the middle of the shutdown, we're trying to bring viewers every single bit of alternative data we have. ADP is something we follow closely. They've begun putting out 3 times a month a lagging by 2 weeks. So this is for the week ending October 25th. Index of average weekly job growth over the 4-week period. That is down by 11,000. And somewhat in contrast to the month-on-month that we got last week, which was plus 42,000. So it does suggest some weakening as the month of October went on compared to what they had from September to October. Remember, this is a weekly index that comes out 3 times a month. And it's just really looking for what is the right level of job growth here. Separately, guys.
That could be the reason, folks. I mean, I know we've been looking for a reason today. This jobs data showing very slow October. I mean, we talked about this with the headline. Now we're getting some more details on it. I mean, maybe that's the reason. Maybe it's the labor market. Then again, the market didn't care yesterday about the labor market. They cared more about the shutdown. So not sure if it's that big of an issue for the market to care about it today. Yeah, 11K jobs per week is obviously not a super growing economy. Again, dude, I don't know how Trump's going to navigate this. If we really do end up seeing some labor market numbers that are not good, but all of it's because of AI and the stock market benefits from labor participation going down because margins go up, which again, there's going to be a demand story to the labor market going down as well, which is more macroeconomic versus the AI trade. But Trump's going to have to somehow explain to the American people that the country is not hiring as many folks. And, the number one thing that he cares about is people have jobs. And any president would care about that. And so it's one of those things where it's I don't know how he's going to navigate it. And if the market continues to go higher, I mean, shareholders will love it because obviously asset prices go up, but Main Street is the one that has the majority of the votes. Then again, I don't think we fully know if the labor market is deteriorating as bad as people say it is. It's definitely declining. Is it declining to the point where, every month we're adding 10,000 jobs or something like that, or 40,000 jobs? That would be abysmal. I don't think we're at that level yet. And we need the government to reopen so we can see jobless claims. We are in a recession if jobless claims tick up to 350 to 375,000. Before the shutdown, we were averaging 220, which is very reasonable. There is no recession in sight when you're only averaging 220 historically. Are we back up to 280, 290? Are we at 3? That's a very important piece of data that tells the market if people are filing for unemployment. And that lets you know how bad the labor market really is doing. But we haven't had that data for 40 days, over 3 weeks. And so that stuff is going to be really important to get going into next year. Amit, if AI continues to crush the jobs market, do you foresee AI turning political, i.e. the AI Reduction Act? 1,000%. I think it's going to get political. I mean, we're already seeing this with the data center spend and how electricity prices are going up, and certain municipalities are basically protesting against data centers being built in their region. And the only solution to this is that Google or Meta or something is going to have to figure out a way to make sure that they can subsidize the rising electricity prices of downtown Virginia. If those prices were to double, I don't know if they can do that. I would imagine they have the free cash flow to do it, but nonetheless, it would hurt their margins. There's a lot of different ways I think the hyperscalers have to think about it. But there's no way in hell the American public will be okay with electricity prices doubling for people to type more queries into an LLM. So I think at 1,000% will get political. And right now, the administration is on the side of AI. As soon as AI starts really either taking away jobs or potentially sort of decreasing affordability, it really creates a whole new question. Nebius right there, 105.64. The solution is much more energy production. Yes, that is also true. The problem is we do have a pretty big bottleneck when it comes to energy. But obviously that would be the most important way to get out of this. In terms of Anthropic, we have some increased projections by them as of yesterday. They are projecting break even around 2027, $70 billion in revenue and $17 billion in free cash flow by by 2028. This puts Anthropic on track to become profitable earlier than OpenAI's projected 2029 timeline, and most of their growth is coming from the enterprise usage of Claude. So again, when you see numbers like this, it's very exciting for the overall sector of growth that AI is starting to materialize in, especially on the foundation models. But the level of energy, the level of data center usage, and the level of potential price increases that this would create, I think is a broader issue. And that's what we got to see. Google right there, 288, Apple at 273, Delta 57.88, and then United at 94.55. Anthropic has a better strategy than OpenAI. I think in the enterprise, Anthropic, I mean, just from anecdotally, the people that I've talked to, like the Claude for coding is just like magic. And OpenAI Codex is good, but Claude is like at a different level. But, you know, OpenAI on the consumer perspective, 800 million weekly actives, it's definitely hard for Claude to compete with that. But both winning and both growing is obviously going to be very, very important long-term for this thing to end up scaling. Let's get some more coverage on that SoftBank news we had this morning with Nvidia. They made about $19 billion off this investment, officially exiting the entire stake today.
Yeah. This $5.8 billion stake that was sold was amassed in 2020 period. So it was not back from the original stake that the company had, that is SoftBank, when they amassed as much as a 4.9% stake in Nvidia back in 2017 and 2018. Had that been held, it could be worth as much as $250 billion. Instead, it was sold in 2019 for $3.6 billion. By the way, there also was a period where they were trying to sell ARM to Nvidia, and the proceeds of which would have included $21.5 billion in Nvidia stock as well. If that deal had gone through, it ultimately was abandoned in 2022. It also would have been meant enormous gains for SoftBank on a new Nvidia stake of quite some size. All that being said, ARM Holdings has done pretty well. And OpenAI, Sarah, in many ways is really the key investment for SoftBank at this point. I can remember talking to Masa many years ago where he was talking about the promises of AI long before others, and yet kind of missed some of the key investments early on. Yeah.
So maybe, you know, sort of still in the defensive mode when the Fed was raising interest rates in that period of turbulence. I mean, SoftBank shares themselves have done remarkably well in the last few months. They've just pretty much tripled since April. And I do wonder if this is now, Journal points this out, now that they're out of Nvidia, just a way for public equity investors to play OpenAI, right, which is still a private company, and we sort of wonder what the valuation would actually be. I think it was last valued at $500 billion in the private market, but questions because it's spending so much money and using all sorts of creative methods to fund that, right? So there's a question of how the public market would judge that. So far, so good if you're looking at SoftBank stock.
Yeah, that is an interesting way, obviously using that to your point as a way to...
So they are out of Nvidia. This is the clip for those that have never seen it of Jensen kind of teasing Masa about selling early.
You probably don't know this, but at one point, Masa was the largest shareholder of Nvidia. Oh. It's okay. We can cry together.
This is why when your friend tells you to invest in something and you're good friends with them, you just say, you know what? Screw it. I'm going to throw a little bit of money at it. Because if they make money and you don't, the level of shit you have to deal with is just, it's worse than anything, bro. It sucks. It absolutely sucks. It's not fun to deal with. So, look, they made $6 billion though. Decent amount of money. Yeah, drying their tears with billions. The thing about SoftBank though is, and I think the reason Masa is so upset that they sold early in 2019 is because it's only a $100 billion vision fund. I say only, but like it's you know, it's one of the largest VC funds out there. But if they had kept their stake, it would have been worth 250. They would have more than doubled the entire fund. doubling 100 billion in venture capital is not freaking easy. Like that, like you're lucky if you find one name that could potentially return, 10, 20% of the fund. So Axon right there at 570, down 2.3. I think that's why he was upset. Also, they had some, crappy investments in WeWork, and their Uber stake was not really the best timed. Alibaba was a great position for them, but that was back in the 90s. So, Nvidia would have been that real next big win. It's just they ended up selling a bit too early. But nonetheless, they did end up making a decent amount of billions on it. Rivian right there up 6.8%. Nebius still stuck at 105. S&P now new lows of the day, 678. 678.90. New lows of the day. Is HIMS still getting hit? HIMS is still, 4.5% down on HIMS. I don't know about HIMS, dude. I mean, you see all this credit card data from some of these analyst reports saying that things are going bearish. Obviously, they missed on EPS by 40%. But maybe this is the growth name that has more fun in 2026. It's just a lot of the hype has definitely died down on HIMS. I still think it's relatively cheap, but we're seeing that hype die down. Yeah, SoftBank also sold T-Mobile, 40 million shares of T-Mobile today. They were a big shareholder of T-Mobile, and they took a decent chunk of their stake out of that as well. So they're getting liquidity, and I think they want to invest it in some of these more AI names that they think are better opportunities. And so T-Mobile and Nvidia were the options today. Magusto says I sold HIMS at 58, was not bad. My uncle actually sold, he had 2,000 shares of HIMS. He sold all of it at 58 as well. The day they were pumping, he texted me and he was like, all right, I'm out. So those 50s and 60s. I have another friend who, unfortunately, I was talking to him yesterday. He sold 56 puts on HIMS, and he got early assigned. This is the thing about options trading. Sometimes you can get early assignment on your trades. So he sold a put, meaning that he is obligated to buy the shares. He likes HIMS. He loves the growth of HIMS, and he liked milking the premium. But he sold the puts at $56. So, HIMS is now under 40. He's bag holding about 5,000 shares at this point on that stock, which is not the best thing. So he's going to need this one to pump up. I think he got like $5 of premium, so his adjusted cost base is like $49, but still, HIMS is still getting hit right here. Sometimes early assignment happens before you even have a chance to roll. That's when you have to buy the shares. Nvidia right there, 191.87. That's down 3.6. S&P again, lows of the day at 678. It was not Tevis. I think Tevis has been bullish HIMS for a long time. So Tevis has been owning the name for a while. But no, it was not Tevis who sold those puts. Enzo, thanks for the super chat. How much of Nebius did you buy? About 200 shares today. 100 at 110 and then 100 at 108. I think the idea will be to make it 500 shares as like a core position, or at least, a position in the data center space that is core outside of Nvidia. But 100 at 110 in the morning, 100 at 108. Thank you for the super chat, Enzo. We have 200 shares of Nebius. Dougie, thank you for the 5 gifted. Appreciate you being here, sir. And thank you for the 5 gifted. Do you think Friday was a dead cat bounce? I don't think so. I think the S&P would need to get closer to 670 to say it's a dead cat bounce. Again, we got to 661 on Friday. We're at 678. We were at 681 yesterday. I think there would need to be a little bit more evidence to see the conclusion for this to be a dead cat bounce. I really do think we went up a lot yesterday, and we needed to have a little bit of consolidation on a day like today. So it's not crazy to imagine that we're getting a 3% drawdown on some of the big names. Here's the update on the Senate did pass the bill, and now it goes to the House. And if that goes through, the shutdown should be done in the next 48 hours.
That will be to reopen the government. Part of it will be for the rest of the fiscal year. Part of it's only until January 30th. But now it goes to the House. Passage there seems very likely, even though House Democrats are whipping against the measure. Fiscal hawks in the Republican conference are already calling it a total win. We're expecting to see that vote tomorrow afternoon. Members have been told to aim for around 4 o'clock, could go a little bit later. But now the race is really on to see if those healthcare tax credits can be reauthorized before they expire at the end of the year. Senator Jeanne Shaheen, she was a key part of brokering that deal to end the shutdown in the Senate. She told NBC that the 40-plus day shutdown has put the healthcare debate front and center, and if Republicans don't find a path forward, they will pay for it in the midterms.
There are a number of Republicans who now recognize that this is an issue that's important to them and they need to work with us on it. And if they don't, then the American people are going to hold them accountable.
Still, Republican senators that I spoke with yesterday, they're looking to make any sort of bill about more than just the tax credit, potentially making some larger changes to how the Affordable Care Act, or Obamacare as it's known, works. Now, Senate Majority Leader John Thune did promise Democrats that they will get a vote on a bill of their choosing in mid-December. And in Congress terms, that is just not a lot of time to come to a complex agreement. Then again, Democrats are going to have the chance at the end of January to shut down part of the government again if they are not happy with how things are going.
That's the part that's annoying me going into 2026. If we get into a shutdown again, going into the beginning of 2026, I mean, we have to deal with this rodeo all over again. And quite frankly, even the threat of that shutdown, I don't know if it hinders an end-of-year rally or it makes the market a little bit more afraid, but we saw what happened over the past 40 days with the shutdown, with airports, furloughed employees, et cetera. To go through that again, and imagine that one lasts even longer than 40 days. Imagine the first couple months of 2026 are a shutdown government. Like, that would be insane. So I would hope that's not on the table, but it's definitely a risk that we can't ignore. Ethereum, are we moving on ETH? Dude, Tom Lee yesterday, he said freaking 9,000 by the end of the year. I love Tom. I don't know if we're doing 9,000, bro. I don't know. He was like 9 to 12,000 by January. I mean, maybe it'd be a bit aggressive. This was his interview yesterday with Tom Nash talking about crypto.
And there have been a lot of OGs, original Bitcoiners that are selling above 100,000, but it is still an underallocated asset class. So I think Bitcoin actually potentially can get to the high 100,000s, maybe even 200,000 by the end of the year. I think it's a big ask, but to me, what's more obvious is Ethereum can have a huge move into year-end, because even Cathie Wood wrote about it. She thinks stable coins have been cannibalizing demand for Bitcoin, and gold and tokenized gold is cannibalizing demand for Bitcoin. But stable coins and tokenized gold run on smart contract blockchains like Ethereum, and Wall Street is building, and Larry Fink wants to tokenize everything on the blockchain. That means Ethereum is where people are starting to raise their growth expectations. And if you're raising your growth expectations, then your discount to the future is going up. So I think that there's a bigger move in Ethereum. And Mark Newton, our head of technical strategy, thinks we can be like 9 to 12,000 by January. I think that's about right. I think Ethereum, just 3,600 more than doubles between now and year-end, or between now and January.
Bro, does anyone see 9 to 12,000 by January? I'm sorry, I just think that's a really aggressive target. Would I be happy? Of course, because that means Robinhood, BM&R, Coinbase, all those risk-on names, you get a triple on Ethereum in the next 2 months. Those names are going to really do well. I mean, I think maybe in the most bullish of scenarios, and maybe because I'm not bullish enough, I think I see 5,000. Like, you want to really get super bullish, maybe 5,500. I did not see 9,000. Like, that's, I don't know. I think it's up there as a price target. 4,500 end of November, 55 end of December. Yeah, like, that's not crazy. And also, I feel like we're being super aggressive there because, like, yes, should crypto pump towards the end of the year with the money supply increasing, rate cuts, yada, yada? Yes, but like, it was supposed to have a massive pump in October. That didn't happen. First couple of days of November have been pretty sucky as well. So it's like, at some point, the market humbles you and you're like, okay, so it's not really reacting. And now, obviously, crypto can swing up and down like crazy, but does it swing to the tune of $10,000 from here? Or sorry, what would it be? $6,000 from here? I think that would be a big ask at this point. But I'd be happy if we do get there. Yeah, and look, the top on Bitcoin or on Ethereum was like what 4,900 a couple months ago. For the past few years, it has not been a Bitcoin that is like meaningfully broken out. And so like, I think you would need a massive catalyst or a massive level of reorganizing of capital. You need a lot of retail investors to be excited. And I just don't see those tailwinds in place right now. I see the long-term tailwinds of stablecoin tokenization in place, not over the next coming weeks. But if it does happen, then exposure to BMNR, I don't think is horrible to have it. Gold is sucking the life out of crypto. This I agree with. I don't know if anyone expected a 70%. I mean, I don't know if we have any Peter Schiffs in the chat, but who expected gold up 40% or 70% this year? 55% to be accurate. Like, I think that put a lot of money, we're talking about tens of trillions of dollars, into an asset that I think people thought Bitcoin or Ethereum would be the beneficiary of. And it just went the opposite direction. So this could also be one of the reasons why. And also that whole crypto rotation from gold. I mean, you had a 3% decline on gold 2 weeks ago and people thought there was rotation. That's when Bitcoin got to 110 and then it kind of faded out because gold just went back up. People bought the dip on gold over Bitcoin. So maybe that is one of the narratives why Bitcoin has not been able to make a massive move. My uncle did know. That is correct. Now, he chose silver as his core holding, but he definitely had a feeling commodities were going to do well. I think we have Kevin Hasset on soon. We'll get to hear from him as the National Economic Director and see if he gives any updates on the shutdown, tariffs as well. Did I say choose? Okay, whatever. I meant to say chose. I meant to say chose. I meant to say chose. Did I really say choose? Crazy. All right, Kevin Hasset. Let's see what he chooses to say.
There's something more we can expect maybe in stimulus as people get paid.
Yeah, I think that the way to think about what was going on, right, is over the last couple of quarters, because of the success of President Trump's policies, we've had about almost 4% growth. And we were carrying that momentum into this quarter. But then because of the shutdown, I think that the estimates from CEA and Goldman are that it's going to knock maybe 1 to 1.5% off of that trajectory. So we're looking for lower growth in the quarter. The question is, when does it all come back? And I think that some of the stuff is lost forever and some of it isn't. But I would guess by the first quarter of next year, we'll be back at the 3 or 4% growth pace.
When do we get the economic data releases? We're craving data, especially those numbers on jobs.
Yeah. Yeah, I haven't been briefed on that yet because there's been, quite a lot of disruption because of this terrible shutdown. And so, for example, I've been told that some of the surveys were never actually completed, so we'll never perhaps even know what happened in that month. And so we're going to be staring a little bit in cloudy weather for a while until we get the data agencies back up.
What do you make of some of the alternative data sources? I highlighted, for instance, last hour, the WARN notices, which are indicative of layoffs. We've seen a little bit of a spike lately. The Challenger layoff data, we've seen a little bit of a jump lately, actually the highest October that we've seen in decades. Are you concerned about the labor market here making a turn for the worse?
Well, the thing is, as you said, that we don't have the actual bottom line right now. But one of my old friends and one of the best Wall Street economists, Torsten Slok, put out a summary of all the labor market indicators. And on average, at his newsletter, it looked like things were still pretty positive, but not as high as it was in the first term of the Trump administration. But if you consider that we're also doing things like an immigration policy that's cutting the number of workers, the fact that we're still gaining jobs and reducing unemployment is something that we expect.
Right. That's something that came up today in NFIB. We mentioned it in the last hour. The percentage of employers who think quality of labor is the #1 problem, up 9 points. That's the biggest month-on-month jump we've seen in a while. You think that is related to restrictions on labor supply?
Well, I think it's also the case that one of the things we're seeing, like you saw what an incredible earnings season it's been, because AI is making workers way more productive. You know, we're seeing that it's making wages go up a lot, and it's also making firms more productive. I think that smaller firms are behind the adoption curve for AI a little bit, and so that probably explains why surveys can count, you know, on people saying, I wish I had better workers. I think basically what's happening is that firms everywhere want workers that understand how to use AI tools.
Agree. How much do you think AI is the investment, the trillions, how much is that driving the economy right now?
Well, I think the way to think about it, right, is that the AI is making it so that people can run their business better. I don't know if you've ever tried to defeat an AI at chess, but you can't, right? And so imagine you got this really complicated chessboard of a business, and now all of a sudden AI is helping you run it better. And that's why we just had like a record for success in terms of positive earnings surprises, because the firms have been accelerating their profitability and productivity so quickly, and the workers have as well. Really, the adoption, you know, skyrocketed this year, and already we're seeing it in the bottom line data. And so it really is an incredible productivity boom. You know, the productivity data, do you remember back in the computer age, everybody was saying, well, the productivity's everywhere but in the data. But right now we're looking at about 3% productivity growth. And that's probably going to revise up once we get the data better in the future. Usually these benchmark revisions make productivity go higher when there's a tech boom. So think about it. You got underlying 3% productivity growth. That means if you get labor stock growth and capital stock growth, then you're really looking at, you know, blowout positive growth. And you're doing it from the supply side.
The problem here is the labor market. The problem, like all of this stuff makes a lot of sense. And it's kind of what's baked into the big, beautiful bill. But if people don't have jobs, can that growth be enough to overpower a weakening in the labor market? And that's why Sarah's asking for data, because we really need to know what the hell's going on with the labor market to make an accurate prediction on if AI is enough to withstand that.
And so it's not really inflationary. So we're really, really bullish on what's going on in the economy, and really grateful for the senators that did the job and got the cooler heads and got the economy and the government open again.
Yeah, but just beyond the productivity boom, which sure it's happening, just the investment that's flowing into building data centers and compute, just offsetting. It's not like the entire economy is perfectly healthy right now. Manufacturing has been in a slump for several years, contracting. Housing has been weak as well. Higher mortgage rates hurting affordability and supply too. The consumer has slowed down, and there's this bifurcation in high income versus low income. So I just wonder how much of the growth that you're talking about is really just the AI trade.
Oh, well, again, the reason that the AI firms are being successful is that their customers are being successful. And their customers are being successful because there's this massive positive technological change, which is improving the productivity of workers and the profitability of firms at a remarkable rate. And, you know, I think that if you look at year-over-year consumption growth, it's about 6% nominally. If you look at investment, capital spending is a massive capital spending boom, and it's not just in the AI space. And so I think that the AI is part of the story, but the rest of the story is that we just had this big, beautiful bill, which was like one of the more powerful tax stimuli that we've ever seen, because it not only did the stuff we did last time on the corporate side, but also helps supply side tax cuts for workers with no tax on tips, no tax on overtime, and so on. And so we should be getting a big increase in labor supply and in investment, and that's the kind of thing that gives you a boom without causing inflation.
Although with the reopening, Goldman today says the reopening does raise the prospect of some reflation, plus the a tailwind from tax season, obviously depreciation and the bill's effects. Do you think fighting or getting disinflation in the first half is going to be a little more of a challenge than it has been?
Well, I mean, if you look at it, right, the last CPI report surprised almost all the Wall Street analysts, 48 of them, on the downside, meaning it was good news on inflation. And that number itself was inflated because there was a bunch of refineries shut down, if you're looking at the top line. And so we're comfortable that inflation has come way down, the 5% on average for Joe Biden. It's probably a little less than half of that right now. And the trajectory is really, really, really good if you look at it. And inflation is one of those things that has a lot of momentum if you look at the charts. And the momentum right now is headed really towards the Fed's target.
Even though it's been increasing for 5 straight months as of September?
Well, I guess if you look at it from January, there's ups and downs and seasonals. But yeah, it was surprised on the downside. People were expecting it to accelerate, and it didn't. And I think that is because this growth that we're getting is not from like printing a massive amount of government debt and sending checks to people like Joe Biden did. I mean, think about it. If you look at the macro.
Okay, so you just blamed Joe Biden for sending checks. Does that mean he knows that Trump is not actually planning to send a 2,000? I mean, why would he say that if Trump was getting ready to send out checks? This is why I've been skeptical of this $2,000 tariff dividend, although Trump literally said yesterday we were going to issue a dividend, which sounds like a check. But if you're blaming Biden for the checks and inflating the economy, I would imagine the same could happen if Trump gave a check, which means they probably aren't going to be giving out stimmy checks.
Economic picture, the way you get inflation down is you don't have the government spend like crazy. And we've actually got a deficit reduction so far this year that's really on track by December to be down $600 billion for the year alone. And so that $600 billion reduction in the deficit, takes the macroeconomic pressure off. But the other thing is we're like really digging into what we could do at the micro level to go after price inflation, on an item by item basis. And so you can remember all the work we did at the beginning of the year on eggs. Egg prices are now down relative to last year. And we are looking at housing and other things that we can do to make people's lives more affordable.
Well, so I wonder how you read the message from the elections that we just had, the big wins for Democrats, not just the New York mayoral election, the governor's races in Virginia and New Jersey, because there is this feeling that people, I know that inflation has come down from the Biden era, but it's still elevated. And those cumulative gains in things like beef prices and coffee prices, the everyday items that people face are still high. And that is something that President Trump ran on. I do wonder what sort of economic takeaways you have from the big Dem wins.
Oh, sure. You make a really great point, Sarah. And the thing is that under Biden, because the inflation spiked so much, the real incomes, which is like the real purchasing power of ordinary folks, on average went down by about $3,400. And since President Trump took office, real incomes have gone up. That means purchasing power has gone up by about.
Oh no, we lost your camera. Oh, I was waiting to hear the answer on that one. Well, we thank Kevin Hasset. We got to most of it. Kevin Hasset is the head of the president's National Economic Council. He's the advisor, also in contention. Oh wait, you're back. You're back. Kevin Hasset, are you there?
It's not just me, guys. It's not just me. It happens to everybody.
Yeah.
Sorry, the shot froze.
Oh, I was about to make my best point in history,
I know.
sir.
I was like hanging on every word. So talk to us about the inflation story and the pain that people are still feeling.
Yeah, that again, that I don't know where I got cut out, so apologies if I'm repeating myself, but because people's purchasing power dropped by so much because of inflation under President Biden, where it went up to almost 10% and averaged 5%, then real incomes, real purchasing power dropped by about $3,400 over the entire Biden term. And since President Trump has took office, we've been focusing on affordability and helping purchasing power go up. And it's gone up by $1,200 right now already this year. But people are right that we haven't actually closed the gap. We haven't filled the hole.
Wow. Hasset acknowledging that people are right and the administration has not fully closed the gap on affordability. So he's making the argument that purchasing power went down due to inflation under Biden, and that's getting better, but also acknowledging that it hasn't fully been closed.
Biden dug yet, and they're right. If you go to the grocery store, I'm the shopper in my family, and I was looking around at prices of hamburger and milk and everything just this weekend, and they're still way higher than they were when President Trump left office, and that's something that we're working really hard on.
So should the Fed be?
So the argument right there, and kind of Bassent said this morning as well, is they kind of inherited, I think it was the exact term Bassent used, an affordability crisis, and they're just straight up acknowledging that it's not the best right now, which honestly I think is the best approach because you can't lie about it, right? So if they're acknowledging it's not the best and they're working on it, any level of progress on that could be the administration's best argument to say, hey, we are working on making things more affordable.
Cutting rates in December, Chair Powell kind of made it seem like it wasn't a given.
Yeah, I was disappointed in what Chair Powell said in the following sense, that if you think about it, between the last two meetings, what happened is that we got a government shutdown, which was probably a surprise, and we got inflation number that was much better than expected. And so it didn't make sense that so that news would make them more likely to cut in December, and yet somehow they came out of the meeting saying they're less likely to cut. And I was kind of befuddled by that statement that they were doing, and wondered again if they're once again doing something political.
Finally, Kevin, I wonder what's more likely, a $2,000 tariff rebate check or a 50-year mortgage?
Well, you know, I think that they're both really good ideas. The fact is that we've got a big reduction in the deficit. And the interesting thing is that it's not just because of tariff revenue. We've had a big positive shock to income taxes as well, because people's incomes are so much higher. And so back in the summer when we were saying that for now, let's think of the tariff revenue as something that reduces the deficit, there's more room even for deficit hawks to think about rebate checks like the president talked about, because we've actually done such a good job cutting spending. And the supply side effects, the Laffer curve effects of the tax cuts have actually made revenues go up. We're up about $200 billion relative to last year in revenue as well. So it makes room for it. And in terms of the 50-year mortgage, the bottom line is that it would reduce the monthly payment. We've got a real problem in America that too few people are getting that first home, and the age of first-time home buyers has gone up by about 10 years over just the last few. And so President Trump is really focused like a laser beam on trying to come up with something that addresses that.
All right. Well.
All right. There you go. Again, we looked at the math yesterday on the 50-year mortgage. It decreases the average price by about 10% a month. Do you take a 10% decrease for 20 years of paying more interest? Not sure if it's the best trade-off. AppLovin getting wrecked today, below 600, down 9%. But nonetheless, if it encourages more home buyers, you know, maybe that's the argument that Trump is going for as well. So look, that was pretty interesting to me, because I did not expect Kevin Hasset to full-on acknowledge that the administration has not closed the gap on making things more affordable. Quite frankly, I mean, Trump was asked the same question yesterday, and Trump started talking about Russia and Ukraine. So you could tell Trump is not fully on board with kind of acknowledging the same way that Hasset acknowledged that, you know, things are not perfect. And like, you know, sometimes you kind of just got to acknowledge, like, yeah, things aren't perfect. Grocery prices are up, electricity prices are up. Working on it, though, is what people care about. And for him to actually acknowledge that, I did not expect him to do that. I really didn't. But that's what he said. And, you know, Besant kind of said the same thing as well. So the question then just becomes, how does the administration continue to make the argument that affordability at scale will be able to take place? And I think they can. I think they have a chance to figure it out. It's just a question of like what policy initiatives they're going to go for. Palantir right there, 189, HIMS below 40, T-Mobile 211, Tesla 435. That's down 2%, a little bit of a rebound. Palantir rebounding up 187. Nebius 106, up from 103, and then Nvidia 192.58. In addition to the 50-year mortgages, some of you guys are saying in the chat, there are rumors yesterday that the administration is thinking about 15-year car loans, which, again, a lot of these aren't, I think, solutions to affordability. They're just ways to potentially open up the ownership economy for people that can't afford those monthly payments. The question always comes down to the trade-off, right? And I think time will tell what that trade-off looks like. I don't know if a 15-year car loan is the best idea, but, you know, maybe it needs, but it goes to the point of how, again, how you keep saying this, but how bifurcated this economy is. The fact that you have a subset of the population that needs the option for a 15-year car loan or a 50-year mortgage just shows like there's two economies in this country. And for that point, every country, but, you know, given the United States has the world's biggest economy, it's really prevalent here. And I think a lot of that is divided on the lines of if you have assets or if you don't. What car lasts 15 years? That's a good question. That is a good question. My Civic lasted a nice, I mean, I probably could still be driving my Civic, but after about 5-6 years, I was like, all right, I would like to upgrade. Dude, my sister, she's had her car from 2016 and she's just not replacing it. And every time I'm like, dude, this Toyota Corolla is on its last wheel, literally. Like, it's time to move on, and she just won't replace it. But she feels happy that she paid it off and she doesn't have to do a monthly payment. And so, like, peace of mind to her is really important. And so it goes back down again to that question around how much people think they need to allocate to these types of expenses, and if they have the chance to afford it. Tesla getting a little bit of a green candle right there, from 432 to 435, down 2%, still down about $9 on the day. And then Palantir at 190. Again, this is not that ugly of a day. S&P is at 680. I mean, we went to 682 yesterday, up from 670. I am not upset, not even the slightest, at 680 on the S&P. I think if we can hold that for the next couple of weeks and then potentially get ready for a next leg up if we have good NVIDIA earnings and rate cuts, that would be the right way to approach this. But it's not crazy to imagine 7,000 end of year if NVIDIA delivers and we end up getting those rate cuts. Yes, Hood is still down 3%. I don't see the news on AppLovin, guys. I don't see any news. I mean, they obviously have that SEC probe. Austin, do you have any news on AppLovin? Because I didn't see any headline. I would imagine, I don't know, I guess people woke up and said, hey, we're still worried about this SEC probe. Maybe people know there's an update coming and selling it off beforehand. Yeah, Austin doesn't have any update either. It's a pretty big move, though. 9% down. Getting hit today. Natural gas futures up 5%. Oil prices, are they up today? Oil prices are indeed up almost 2%. Still below 65, which is good to see. But oil prices are higher. By the way, there's a brand new Palantir interview with Karp. Remember I told you guys that Karp was going to be doing this like a sit down, or not the sit down, this like walk across the office. It just came out. So it's 40 minutes. I mean, we're not going to watch it here, but for anyone who does want to watch it, there it is across the New York office, him talking about the book. So super cool. I'll link it right here in the chat if anyone wants to watch it. But that one is officially out. What else? What other headlines do we have? We got Oklo after the bell. I texted Jason. He's got to confirm if we're doing TT after the close. He is not officially confirmed with me yet. So if he does confirm, he might have other obligations today. So I just have to confirm with him. But we should be having Technical Tuesday. If not, then we will delay that. And you have 680.3 on the S&P, a little bit of a green candle right there. In terms of other headlines, I don't see anything too crazy. We talked about the labor market data, talked about Goldman Sachs, looked at some of the option flow. Nebius earnings were awesome. Oh, C Limited also had earnings. They missed on EPS by like 20%. And that's why their stock is down 5% on the day. But overall, it seems like a relatively good earnings. But the EPS miss got them hit. Are you bullish on Oracle? I do not know enough about Oracle. I do think that the debt they're taking is getting a bit aggressive. I don't think it's an issue that these companies are tapping the debt markets. It's like trillions of committed spend and 100 billion total, including Oracle's 38 billion of debt. But it's something you can't ignore. And given Oracle is not a hyperscaler like Meta, Microsoft, or Amazon, they don't have the types of free cash flow that those companies have. Them taking on debt is definitely something to at least pay attention to. But I've not done enough of a deep dive to get super bearish or excited for Oracle. S&P, yeah, I mean, it's trying to go green, folks. Look at that. About 90 cents away. There's your green candle, 680.6 on the S&P. Again, the big update on Grab was that it looks like SoftBank is trying to get rid of the go-to CEO, which would make room for Grab to acquire the company. I think it would be a massive, massive move and consolidate them in Southeast Asia. No confirmation on that, but towards the end of December, I think we'll get more updates, and then we'll see. Nebius back to 108. Again, Nebius moving with Nvidia. CoreWeave was at 88. Now it's at 91. CoreWeave getting hit the most today, but you are seeing a lot of these names get a bit of a bounce. Nvidia right there, 193. Oh, yeah, the biggest news of yesterday. John Cena became the new Intercontinental WWE champion. So that was also a pretty big deal for those that care about the WWE, even though it's fake. Sorry to break it to you guys. It's fake. It's not real. I was heartbroken in 2008, but we all move on. Yeah, I thought he retired 1 billion times, bro. This guy keeps coming back. I remember watching his retirement in 2010. I'm like, okay, he's gone. And then like 5 months later, he was back. I was like, okay, I guess the dude always comes back. Is it bullish for the market? I would hope so. Maybe. It's not fake. You are fake. Maybe I'm AI. Maybe. See, AI can't butcher the word of the day like I do. Which, speaking of that, let's get to word of the day. Let's see what we got. Can we go 3 for 3? We got the last 2. Can we go 3 for 3? Oh, we're not going 3 for 3. What the heck is this shit, dude? What is this? Maybe, let me see. Apotheosis? Apotheosis? Has anyone heard of this shit? The highest point in the development of perfection or something. It's the ultimate form. The elevation of someone to divine status, to be glorified or idealized. Okay. Let's see if we got this one. I'm going to say apotheosis.
Apotheosis.
Oh, there was no chance. There was no chance. There was no freaking chance.
Apotheosis.
Nah, bro. No way. Apotheosis. That wasn't happening. His final symphony was the apotheosis of his career. Every note felt transcendent. Dude, talk about the glaze of that sentence. Goodness. His final symphony was the apotheosis of his career. Every note felt transcendent. I mean, I know I glaze Carp and Vlad, but I don't think I've ever said something like that, bro. Every note felt transcendent. What? That is a different type of glaze in that sentence. So that's what you got. Apotheosis. Amit, would you buy the dip on Axon? I just think they have a very high multiple, and I haven't done enough due diligence. I know Tanner bought it. He likes it. He was telling me about it last night. I think they are basically a monopoly, but you got to be ready to put up with basically 200 times earnings if you're buying the dip on that one. This word isn't difficult to pronounce, dude. Don't tell me anyone saw this without the pronunciation breakdown and was like, "Oh, apotheosis." Like, no, it looks like apotheosis. It looks like freaking apotheosis. Because I don't like using the phonetic breakdown because then it's like cheating. Like I like when I see the word, I want to be able to say it myself. Because anyone can use the breakdown and figure it out. And I know most of you, there's no way most of you thought this was apotheosis. Like there's no freaking way. That's what it is. That's what we got. What do you think about Fiserv? I don't know anything about Fiserv. I know Chris likes it. I haven't looked at his DD on it yet. But I think Chris, did Chris do a podcast with Steve yesterday about Fiserv? Was that the stock? Because I didn't get to watch it. But I know they pick one stock every Monday. Is that the name they were looking at? Honestly, bro, I know they're in the payment space, but I really don't know that much about the company. So I'll probably watch that and try to get more updated on it. I haven't looked deeper into XPEV. I know a lot of people like this. There's only so much time in the day, up another 3.2%. I mean, I really haven't looked into it. I know robotics, EV, China. I just have not had the time to actually look at that one. Tesla right there, 433, Bitcoin 103, and then Ethereum 34.74. Yeah, Tanner likes 4, and he likes them also because they're buying back like $1 billion of their stock, and the company's only worth $6 billion. He also thinks there's a major acquisition play in Shift 4, but Fiserv's down like 50%. So I think that's why Chris is getting more excited about that one as well. I got to look into it. I have not looked into either. I mean, honestly, good old PayPal sitting there at 67, waiting to make a move. Maybe that's the payment move for 2026. I don't know. It's just some of the other names have a bit more growth, which is why They're getting people to be more excited. All right, that's it for me, folks. S&P loses 680. Very choppy price action back and forth. Again, we had a really good day on Monday. Not crazy to see Tuesday kind of give back some of those gains. And if we're up 1.5 and we're giving back 0.3, I think that's all right. I'll be back for the close. We got Oklo. We'll see if we do TT. And then we'll keep going from there. Tomorrow we have a bunch more earnings, and Nvidia is the next big catalyst going into next week. So that's what we got. Again, this labor market thing is the most important thing I think we all have to be paying attention to. But outside of the labor market, rate cuts coming up hopefully in December. The probabilities of that are really important. And then you got Nvidia. If you can get a decent Nvidia trade, even with declining rate cuts, when the shutdown opens, we'll get more labor market data, and then be able to conceptualize what's going on with the labor market in the face of more rate cuts. If Nvidia can deliver, I think that's going to be the most important thing going into the end of next year. That's what we got. All right. Thank you, everybody. Appreciate it. Siege, thank you for becoming a channel member. Appreciate it, man. Thank you for being here. C. Harris, thanks for the super chat. When do you think Anduril will IPO? I have no idea. I would imagine 27. Palmer Lucky did say in a couple of years, probably not 26, but if they do IPO in 27, we know Mr. Dougie, who has a stake in Anduril, will be very happy. So probably closer in another couple of years. All right. Thank you all. Appreciate it. Hopefully everyone has a apotheosiscliptic day. That was so bad. So bad. I want to say I hope everyone's having a divine day, or whatever the hell that word meant, but I'm just going to leave. All right. Thank you, everybody. Love you all. See you guys on the market close. Bye, everybody.